चलो very good morning everyone. How are you all? I hope everyone is doing great. Can you first everyone reply ki is the voice is audible or not? Video is perfect or not? Can you reply fast? Once you reply, we can start our live revision batch. Yes, sir. Everything is okay now. So let us start our advanced accounting CA into advanced accounting revision batch. First, let me inform you that in this revision batch, we'll be covering all the concept from examination point of view. With that, we'll be also doing and solving the expected question. Last day already I have released the expected question for advanced accounting paper, expected question for our upcoming exam, that is September 2024. I hope you have already downloaded the expected question. If you have not downloaded expected question, then make sure that you have already downloaded the expected question from our Telegram channel. The link of the Telegram channel is given in the description of this video. Okay, sir? And also you need to download our accounting standard Saaransh book, AS Saaransh book. The soft copy of AS Saaransh book you need to download, because that will be used in this particular revision batch. That AS Saaransh book is also given in our Telegram channel. So you need to download the accounting standard Saaransh book. So there are two things you are supposed to download. First is what? The list of expected question. Second, our soft copy of AS Saaransh book. And soon, of course, I'll be conducting test as per our revision plan. So what is our revision plan? The revision plan already I have discussed that in the day 1 which topic I am going to cover, day 2 which topic I am going to cover. Already I have given this PDF to all of you. If you have not downloaded this PDF is also given in the Telegram channel. You can download. Got this point? You can see the list of the chapters has been given day wise. So today, of course, in the day 1 we'll be covering AS 10, accounting standard 10, AS 26, AS 16 and AS 12. Then tomorrow the next chapter will come, that is cash flow statement, AS 1 and AS 2. And once day 1, day 2 completed, means what we are supposed to do today, we'll cover all that 4 accounting standard. Then after completion of revision class, what you are supposed to do? After completion of revision class, you are supposed to revise entire question from your respective book, whatever you are following. For example, you have taken regular class from any other faculty, or you have taken from me. So of course the question bank has been provided to all of you. So that question bank need to be completed for that particular chapter today only. Got this point? Or if you are referring ICS study material, so you need to complete all the question of ICS study material. Understood this point? Got this point? I hope you are understanding. So what we are saying, I want to say that today I'll be taking 4 accounting standard. What is your responsibility? Once we have done all the accounting standard as per our revision plan, then once the classes are completed, then you revise all the question of that particular chapter. Correct? Similar day 2, day 3, day 4 will do in that way. So what will happen in the 10 days, we will be able to complete the entire advanced accounting paper. Correct? And then one more point, that soon I will be giving you the test series. So test series, what you are supposed to do, once the day 1, day 2 completed, your revision also completed, your entire practice has been also completed, then after day 1, day 2 completion, you write down the test 1. So you can see day 1, day 2 combine test 1, then day 3, day 4 combine test 2, similarly day 4, day 5, day 6 combine test 3, and so on. So I'll be taking 5 chapter wise test, and once the entire syllabus completed, then I'll give you one grand mock test. That also you can write down. That grand mock test will be in the format of ICI exam, means how ICI create a question paper, I will also give you the question paper in that way. That will be also inclusive of multiple choice question also, correct? Now of course you must be thinking about what about MCQ question. So MCQ question, soon I will be giving you some PDF of MCQ question that you do by your own. MCQ question, because once the concept is understood, you can do all the multiple choice question by your own. Got this point? Yes sir. Now any doubt you can ask me right now. If you have any query you can ask me below. Can we start our revision now? Yes sir. So we'll start with accounting standard 10, AS 10. Below. So can you give me one green signal fast that we can start accounting standard, or if you have any doubt you can ask me right now, or if you no doubt we can start our revision session. Can we start? बोलिए. चले, so we'll start accounting standard 10. Accounting standard 10 is property, plant and equipment. Property, plant and equipment. One more information I just want to give you. This revision batch will be effective only when you have done classes somewhere else. Means already you have taken regular classes or any other classes from in your previous days. Now we are doing the revision. So this will be effective when you have taken the regular class, correct? If you are the first timer, if you are doing this advanced accounting paper for the first time, so of course we don't recommend the revision class, because revision class is totally from examination point of view. In this we'll concentrate in the area which are very important from examination point of view. Got this point? So this clarification I have given. So for the first timer, of course it is not recommended, but if you are still want to do it, of course most of the part you will be able to understand. Got this point? Can we start AS10? AS10 is what? Property, plant and equipment. Now what is the meaning of property, plant and equipment? Property, plant and equipment are tangible item. Tangible item, what are tangible item which are not intangible, that become tangible item. So what is the intangible item? Intangible item will define under AS26. Simple, if I say tangible item are those items which have some physical component, which have some physical substance, that become a tangible item. Got this point? So property, plant, equipment are tangible item which satisfy two conditions. How many conditions? Two conditions. First condition is what? Held for which purpose? Either it is held for production of goods or supply of goods or services. So it is held for use in production of goods or supply of goods or services, or for rental to other, or it is given on rent to other, or for administrative purposes, or it is used for which purpose? Admin purpose, correct? And the second condition is what? It is expected to be used for more than 12 months, more than one accounting period we can say, or more than 12 months. So if it is expected to be used for more than 12 months, it become property, plant and equipment. What is the first condition? First condition is that it is held for use in production of goods or supply of goods or services. Second is what? Rental to other. Third is what? Admin purpose, and expected to use for more than one accounting period. Understood? This is very simple definition. Now when I am saying use in production of goods, the example is what? Plant, factory, building are used in production of goods. Supply of goods or services means right now I am supplying services to you. So right now if I am supplying services to you, second is I am using laptop, camera, PC, etc. These are held for supply of goods or services. Rental to other means whatever tangible item I have given on rent to earn rental income, that will be also come within the definition of property, plant and equipment. Used for admin purpose, So in this case, admin purpose is a wider term. What AS10 says that admin purpose is a wider term, so it will include all other purpose for which it is used for business purpose. Correct now. So admin purpose has been used in a wider sense to include all business purpose. Thus, property, plant and equipment would include assets which are used for selling and distribution purpose. So selling and distribution purpose will be included in admin purpose. Correct. Even though not specifically mentioned, it has been clearly mentioned that admin purpose will include selling and distribution purpose, finance and accounting purpose, or research and development purpose, whatever. Correct. So that become what? Property, plant and equipment. One more clarification has been given that there are some investment property. Investment property means they are property which are held for earning rental income. So any property which are held for earning rental income, that will be considered as investment property. So investment property is covered under AS 13. It is not covered under AS 10. So any property which are held for earning rental income, any property which are held for earning rental income, even though it is given on rent to other, it will not be considered as property, plant and equipment. It will be considered as investment property, and that will be covered under accounting standard 13, AS 13. However, any plant, equipment, means if I am saying any plant and equipment which are held for earning rental income, that will be covered under AS 10 only. Understood? So any plant and equipment which are held for rental purpose or for earning rental income, that will be covered under AS 10, but property which are held for earning rental income will be covered under AS 13. This is a clarification given. Now there is one more clarification has been given about treatment of spare part, standby equipment and servicing equipment. Standby equipment means, what do you mean by standby equipment? Which we don't use throughout the year, and that is used only when the principal asset is not used. For example, best example if I'll give, generator. Can I say in a manufacturing industry there may be big power plant to generate electricity, but that power plant may require maintenance for 15 days or 1 month. In that case we'll use generator, small generator. The generator become standby equipment. It will be used only when the principal asset is not used. That becomes standby equipment. Spare part means small spare part which is required for routine repair and maintenance, spare part, nut, bolt, etc. And servicing equipment become tooling equipment which is used when we are doing repair and maintenance of any plant and machinery. So the question arises whether it will meet the definition of property, plant and equipment. So whether it will be covered under accounting standard 10. So what AS 10 says that if it meet the definition of PP, then it will be recognized as PP and apply accounting standard 10. Simple. If it meet the definition of PP, so can you say of course it will meet the definition of PP because it will be used for production purpose, or if nothing then it will be used for admin purpose, and admin purpose is used for wider term. Only we need to see that whether it satisfies the second condition, whether they are expected to use for more than 12 months. If yes, it will meet the definition of PP, then apply accounting standard 10. If no, then we will not apply AS 10, then we will apply AS 2. It means then that spare part, standby equipment, servicing equipment will be classified as inventory and measured as per the guidance given under accounting standard 2. Correct? So if it does not meet the definition of PP, then recognize it as inventory and apply accounting standard 2. Such inventory will be charged to profit and loss account as and when they are consumed. Consumed means once they are used, that carrying amount of such inventory will be charged to profit and loss account as an expense. Understood this much? Have you understood this much? So treatment of spare part, standby equipment and servicing equipment also you have understood. With this we completed the meaning of property, plant and equipment. So can you once again repeat with me? What do you mean by property, plant and equipment? Property, plant and equipment are tangible items which are held for use in production of goods or supply of goods or services, or for rental to other, or for admin purpose, and which are expected to use for more than one accounting period, or you can say for more than 12 months. Got this point? Now once the meaning criteria, once the definition criteria is satisfied, then we apply recognition criteria. Recognition criteria means when to recognize in our books of account. So what AS 10 says that when two conditions are satisfied, then we recognize the cost price of property, plant and equipment in our books of account. The cost of an item of PP should be recognized as an asset if and only if the following conditions are satisfied. First condition is what? It is probable. Probable means chances are more than 50%. It is probable that future economic benefit associated with the item will flow to the entity. FEB. FEB means what? Future economic benefit associated with the item will flow to the entity, and the cost of such item can be measured reliably. Normally from tangible item point of view, these two conditions will be always deemed to be satisfied. So normally future economic benefit will flow to the entity and cost can be measured reliably, and therefore if these two conditions satisfy, the cost of an item of PP will be recognized as a asset in our balance sheet. Correct? If can I say if any one of these condition is not satisfied, the entire cost will be recognized as an expense in the period in which they are incurred. So if this condition is not satisfied, then it will be recognized as an expense. Understood? One more clarification has been given that if the cost is not material, if the cost is not material, then entire amount can be recognized as an expense in the period in which they are incurred. Correct? So an entity may decide to expense an item of PP if the amount of expenditure is not material. Now material is a very subjective term depending upon business to business. So that management will take a decision whether to what will be the material amount. Understood this point? Yes sir. Now once the recognition criteria is satisfied, we'll go to initial recognition. Initial recognition means what? At what amount it will measure at initial recognition. What will be the cost price of that particular property, plant and equipment. So what AS 10 says that an item of property, plant, equipment will be recognized at cost price. At which price? At cost price. So initial recognition will be done at cost. Initial recognition will be done at cost. Now what is the meaning of cost? Cost means cash price equivalent. Now what accounting standards say that cash price equivalent means what? What do you mean by cash price equivalent? So this has been divided into two categories. The two categories is what? When the payment is not deferred beyond normal credit period. So if the payment is not deferred beyond normal credit period, then cost price will be equal to cash and cash equivalent paid. Means whatever consideration you have paid, that become the cost price. If the payment has not been deferred beyond normal credit period, suppose the normal credit period is 30 days and you have given a credit of 30 days, in that case the cost price will be equal to the amount of consideration paid. But if the payment is deferred beyond normal credit period, means if the normal credit period in that particular industry is 30 days but you have given a credit of 1 year or 2 years, in that case cost price will be equal to the present value of all future payment. Present value of all future payment. So in this case cost price will be equal to present value of all future payment. Present value of all future payment is nothing but it will be the normal purchase price, means purchase price at normal credit term. So when I am saying this is nothing but purchase price at normal credit terms. Means let me take one example. Suppose if you purchase at normal credit term, the cost price was 10 lakh. The cost price was 10 lakh, but if suppose you are paying at a deferred credit term, more than means you will pay after 1 year or 2 year, and you are paying 12 lakh in that case. So if you are paying 12 lakh, so can I say in this case your deferred payment become 12 lakh, but what is the purchase price at normal credit term? That become 10 lakh. Understood? The present value of this 12 lakh at the discounting rate should be equal to 10 lakh. So 10 lakh become the cost price, and the 2 lakh will be the interest cost, which will be recognized over the period of credit. Understood? So in exam, of course, the discounting rate will be given. Now with FM, I hope you all know about discounting, because FM has been completed. You know about time value of money, so it becomes very simple to understand what is the present value of all future payment. So suppose the rate of discount they have given 9% or 10%. So at 9% you can discount it. You can discount 12 lakh. So that present value will be equal to what? The cost price of property, plant and equipment. Got this point? Have you understood? Yes sir. Now in this case interest will be equal to what? Interest will be equal to future payment minus present value. The difference will be what? Interest. So for example, in our case 12 lakh was future payment and 10 lakh become the present value. So 2 lakh become interest, and this interest will be recognized as an expense over the period of credit unless it can be capitalized as per the requirement of AS 16. AS 16 is borrowing cost. Borrowing cost will be also one of the accounting standard which will be doing today only. So I hope you know about AS 16, that if the asset is a qualifying asset, then the interest cost can be capitalized. Understood? So what they are saying, interest will be recognized as an expense over the period of credit unless it is covered under AS 16. Got this point? Yes sir. Let me take one simple example. An entity, what is a simple example? Entity acquired a plant for rupees 20 lakh on a 2-year interest free credit. So you can see it is given 2-year interest free credit. So even though it is mentioned in the contract it is interest free, but then also it will have some interest component. So this is actually bakwas. This is actually bakwas. Don't think about what is written in the agreement. We need to find out the substance of the agreement. So okay, 2 year is actually more than the normal credit period. 2 year is more than the normal credit period. It means, can I say, in this case we need to find out the discounted amount. So they have given an appropriate discount rate is 10% per annum. Calculate the cost price of plant. So can you see the 10% is the discount rate. So for 2 year, what is the discounting factor? Discounting factor will be what? Discounting factor will be 0.8264. Now you know how to calculate the discounting factor. You can use the calculator. You can add a 1.10, divide equal to 2 times. If you do, then it will come 0.8264. I hope you all know about the calculation of discounting factor, because this has been done in your financial management. Got this point? Anyone who have not done FM till now means you are not writing both group, then of course you must be knowing about that, because your accounting teacher has of course explained you what is the discounting factor in that case. Understood? So what you will do, what is the cost price? 20 lakh multiplied by 8264. So your cost price becomes 16,52,893. Means this is the cost price at which the property, plant and equipment will be recognized. So what journal entry you will do? You only say what journal entry? Journal entry will be PP account debit to payable at this amount. PP account debit to payable. So our journal entry will be property, plant and equipment account debit to payable. With what amount? Amount will be 16,52,893. 16,52,893. And can I say the difference between this 16,52,893 minus 20 lakh, that will be interest expense, will be recognized over the period of 2 years. The first year interest will be 10% of this amount. 10% will come this amount, and this will become the carrying amount of liability. This will become outstanding liability of at the end of first year. Then again we'll add 10%. 10% will come this amount, and this will become the liability to be paid at the end of second year. Means every year recognize interest expense of this amount and this amount. So what is the next journal entry? Next journal entry at the end of year end will be interest expense account debit to payable. Interest expense account debit to payable. How much it will come? 1,65,289. 1,65,289. Next year end, once again the journal entry will interest expense account debit to payable, and that will be 1,81,818, and effectively it will become 20 lakh at the end of year 2. That amount will be paid. Understood this point? Have you understood this point? Yes sir. So for this type of question, of course the discounting rate will be given. If the discounting rate is given, you can easily calculate the discounting factor. Got this point? Yes sir. Now once you have understood this, now we need to find out what is the elements of cost price. Means what is included in the cost and what is not included in the cost price. So what are included? There are 3 components of cost price. First is known as purchase price. Second is known as directly attributable cost. And third is known as initial estimated cost of dismantling and removing the item or restoring the site where it has been located. These are 3 components of cost price. What is the first component? Is what? Purchase price. Second is what? Directly attributable cost. Third is what? Initial estimate of restoration. Initial estimation of what? Bolo. Initial estimation of correct. It will be dismantling and removing the item and restoring the site where it has been located. Correct. We need to understand this particular point. So what do you mean by purchase price? Purchase price means nothing but invoice price less trade discount or rebate, and add any non-refundable duties and taxes. So any trade discount or rebate will be deducted, but cash discount or any settlement discount will not be deducted. Be careful, any cash discount given the question will not be deducted, or any settlement discount given the question will not be deducted. Only trade discount means any discount which is given on the trade date will be deducted from the purchase price. Plus we'll do non-refundable duties and taxes. What do you mean by non-refundable duties and taxes? The taxes which will be recoverable from the government, which can be recovered from the government, is known as non-refund. Means any taxes which are recovered from the government, that will not be deducted. For example, GST, if you because now you have done the indirect tax also, so you know about GST. So GST, if you are getting the input credit, if you can claim the input credit, it means, can I say, it is recoverable from the government, and therefore it is not added to the cost price of property, plant and equipment. But if it is non-recoverable, it become non-refundable, then you can add to the cost price of property, plant and equipment. Understood this point? So can you repeat with me, what is the purchase price? Purchase price means invoice price less trade discount or rebate, add non-refundable duties and taxes. Got this point? Yes sir. Coming to directly attributable cost. So what do you mean by directly attributable cost? Any cost incurred to bring the asset in its present location and condition for its intended use. Means whatever cost incurred to bring the asset in its present location and the condition for its intended use will be capitalized, So when I say directly attributable, so any ongoing expenditure means any ongoing expenditure will not be added. So it will not include ongoing expenses incurred on ongoing activities. Correct? Means can I say any expenditure which will be incurred even though item was not constructed, item was not purchased, then that will not be added. Means only those expenditure will be capitalized which will be incurred only when that item was purchased or item was constructed, then it will be capitalized. Then only we will call it directly attributable expenditure. Simple. Have you understood? So what are the examples of directly attributable expenses? Are transportation cost to bring the asset in the present location, installation and assembling cost to bring the asset in working condition, site preparation cost, professional technical fee, and the cost of testing. This is important, cost of testing. What do you mean by cost of testing? Normally sometime what happen, we incur some testing cost, means we need to first test the property, plant equipment whether it is performing as per our satisfaction or not. So while testing the property, plant equipment, some testing cost will be incurred, so that testing cost will be capitalized. Understood? So once the when the testing is completed and we are satisfied about the performance of that property, plant equipment, then only can I say it become ready for use. And once the asset become ready for use, then we'll cease our capitalization. Understood? The cost of testing. Understood? After deducting the net profit from the selling of any item which is produced during the testing period. For example, testing cost is 1 lakh. So 1 lakh will be capitalized. Now during testing period, suppose you produce 1000 units, which can be sold in the market at rupees 10. So it means you can recover 10,000. So in that case, you will not capitalize 1 lakh, you will capitalize 90,000 net of sell proceed. So this 10,000 deducted, 90,000 will be capitalized to the cost price of property, plant and equipment. Understood? Yes sir. So these are the examples of directly attributable cost. Correct. Now when to cease capitalization, already have said that once the asset is ready for its intended use, once the asset is available for its intended use, will cease capitalization. Means after that will not do any capitalization for initial recognition. So recognition of cost in the carrying amount of the item of PP will be ceased when the item is ready for its intended use. It is quite possible that it is ready right now, but it will be put to use after 1 month. Then also will cease capitalize once the asset is ready for use, even though it is actually not put to use. Understood this point? It means any cost that are incurred after the asset is ready for use will not be capitalized. The example of costs that are not cost of an item of PP, these are very important. Normally they will give in exam this type of item, so you are not supposed to capitalize this to the cost price of property, plant and equipment. Are you getting? You can ask me doubt also. If you have any doubt, you can ask me in the chat box. Chalega? Boliye. Now what are the examples? First, the cost of opening new facility, means you have developed one plant. Correct. Now you have done some inauguration expenses to open that plant or factory. Can I say that inauguration expenses will not be directly attributable expenses to bring the asset in working condition, therefore it will not be capitalized. Staff training costs will not be capitalized. Any advertisement and promotional expenses will not be capitalized. Admin and other general overhead will not be capitalized. So you need to memorize this. You need to keep in your mind, because this direct question will come in exam. This question can be asked in MCQ format also. The cost of opening new facility, Staff training cost, any advertisement and promotional cost, any administrative and other general overhead will not be capitalized. Initial operating losses means any losses which is incurred once the asset is ready for use, that will never be capitalized. That will never be capitalized. Correct. Cost incurred after the asset is ready for its intended use till the asset is actually put to use, means at this point of time asset is ready, but actually it is put to use at this point of time. So any cost incurred during this period will be also not capitalized. This will be charged to profit and loss account as an expense immediately. As an expense immediately. Correct? Have you understood this much? Then relocation or reorganization cost. Suppose you are relocating your entire building from one place to another place, so any relocation cost will also not be capitalized. Any reorganization cost will also not be capitalized to the cost price of property, plant and equipment. Understood? Yes sir. Now coming to point number C, this is also important, but from exam point of view it is very simple. Any initial estimated cost of dismantling and removing the item or restoring the site where it has been located will be also capitalized. So can you say it is a future expenditure? It is a future expenditure which will be incurred at the end of useful life of asset. Correct? So what our AS10 says, that if there is an obligation, to dismantle the item at the end of useful life, then can I say we need to create a provision for dismantling cost as per AS29. We need to create a provision for such dismantling cost as per AS29. So what AS10 says, that the provisional amount whatever you have created as per AS29 will be capitalized to the cost price of property, plant and equipment. So what AS10 says, that if the obligation of DRSL means what? Decommissioning, restoration and similar liability. So one name has been given to such liability. The liability is known as decommissioning, restoration and similar liability. Bolo, decommissioning, restoration and similar liability. We'll call it प्यार से DRSL. So if the obligation of DRSL has been incurred when the item was acquired or during the period of use or during the useful life of the asset. So if the obligation means present obligation as per AS29. Present obligation as per AS29. The obligation has been incurred, then of course the cost of obligation will be capitalized to the cost price of property, plant and equipment, and the amount will be estimated as per AS29. Now AS29 say that this will measure at present value of future expenditure. At present value of future expenditure. Present value of future expenditure. So the future expenditure will be given, discounting factor will be given, multiply that future expenditure with discounting factor, that will be amount equal to present value. That amount will be added to the cost price of property, plant and equipment. What journal entry will do? Journal entry will be property, plant and equipment to what? To provision. Understood? In this provision of course will apply AS29. In this property, plant and equipment will apply AS10. Understood? Have you understood? So it will be capitalized the cost price of property, plant and equipment. Amount will be measured estimated as per AS29. However, if the obligation has not been incurred, the obligation means there is no present obligation to dismantle such property, plant and equipment, then will not capitalize any cost to the property, plant and equipment. For example, you purchase one air conditioner and you have installed it, but there is no obligation to dismantle it. If there is no obligation to dismantle it, then will not add any initial estimated cost to the cost price of that air conditioner. Correct? So there must be some obligation to dismantle and remove and restore the site where it has been located, then this particular para will be applicable. So that obligation can be either due to law or due to contract. Correct? Let me take one simple example. Suppose you have constructed one factory for a particular production purpose. Once the production process will be completed, then as per the legal contract, you need to dismantle the entire factory. So can I say in that case you have a contractual obligation to dismantle the factory after the production is completed? In that case, can I say the entire cost of dismantling will be capitalized the cost price of factory building. Understood? Yes sir. Correct. Now that you need to only be careful, you need to capitalize the present value of future expenditure, not the future expenditure. Present value of future expenditure will be capitalized. Correct? Yes sir. Now there are two clarification. First is what? Borrowing cost will be capitalized as per the requirement of AS16. Today only we'll do AS16. So this point will be automatically covered under accounting standard 16. So we know about AS 16 thora ki it is a qualifying asset, then the interest cost can be capitalized, otherwise that interest cost will be charged to profit and loss account as an expense. Detailed discussion will be done under AS 16. Now as per the AS 12, today only we'll do accounting standard 12 also. So as per AS 12, government grant may be deducted from the cost price of asset. So government grant whatever receive may be deducted from the cost price of property, plant, equipment as per the requirement of AS 12. When it can be deducted, when it will not be deducted, we'll discuss under accounting standard 12. Chalega. Let me take one simple example. On 1/4/2017, a PP was acquired for rupees 50 lakh subject to a trade discount of 10% and GST of 18%. Credit of GST is not available. If suppose question is silent about tax, so always assume that it is non-refundable. If question is silent, always assume it is non-refundable. If the question is silent, understood what I am saying? So in this question is not silent, but they are saying the GST credit is not available, means it is not refundable. Therefore it will be added to the cost price of property, plant and equipment. Other directly attributable cost of 5 lakh, useful life of PP is 5 years. As per the applicable law, means there is a legal obligation, PP need to dismantle at the end of useful life. Estimated cost of dismantling is 6 lakh. Appropriate discount rate is 10%. So it need to be dismantled at the end of 5 years. Means you need to find out the discounting factor. So what you'll do? You'll do 1.10 in your calculator. 1.10. So 10%, you'll need to type 1.10 into calculator, then do divide, then equal to 5 times. Why 5 times? Because it is 5 year, it will be dismantled at the end of 5 year. Equal to it is coming 683. So it will be 6 lakh multiplied by 0.683. correct? How much it is coming? 6 lakh into 0.683 is equal to, this is coming 4,09,800. So this become the present value of dismantling cost. So you are supposed to capitalize this amount, not 6 lakh. Here only you can do mistake that you are capitalizing 6 lakh. You are not supposed to capitalize 6 lakh. You will capitalize how much? 4,09,800. Understood this point? So that answer is only given. You can see purchase price is 50 lakh minus trade discount 5 lakh. This become 45 lakh. In this you will calculate 18% GST, and GST will be also added because it is non-refundable. So this become the purchase price. In this you will add directly attributable cost. Directly attributable cost is given 5 lakh, and you will also add initial estimated cost of what? DRS. 6 lakh. It is at the end of 5 years. There is something wrong, I think so. 1 second, I'll do 1.10 divide 1 2 3 4 5. Sorry, my mistake, it is 0.620. My mistake, 0.620. So 6 lakh into 0.620, how much it is coming? 3,72,540. So this is only correct. So 6 lakh multiplied by how much? Multiplied by 0.620. Understood? Have you understood this point? Bolo. Correct. So how to calculate discounting factor? Have you understood? Please respond fast. Have you understood how to calculate discounting factor? Normally discounting factor in CA inter exam will be given in the question, but if not given, you should be able to calculate it by your own. Got this point? Boliye. Up to this any doubt? I'll wait for 2 minutes. Up to this any doubt you can ask me. All the question I'll take at the end. Once I will complete the content of the chapter, first recall all the content, then all the expected question I will take at the end. Chalega? Yes, sir. Up to this, no doubt. Let us now move. Now let us come to self-constructed asset. So what AS10 says that for self-constructed asset, the principle will remain same as we have done for acquired asset. means whatever you have done for acquired assets, same principle will follow. Means you need to add purchase price, then directly attributable cost, then if there is some initial estimate cost of dismantling etc., that will be also capitalized if required. Only one point I want to say, that whenever there is a construction activity, so there are two type of costs. One is specific cost. Specific cost will be always added, but there are some allocable costs. Allocable cost means the cost which can be allocated to two or more than two construction contract. For example, suppose you are using a plant and equipment for construction of two buildings. You are using plant and machinery. You are suppose using some plant for the construction of two buildings. Can you say depreciation of that plant should be allocated to building 1 and building 2? How it is will be allocated, that information will be given the question. Suppose they have given the total depreciation 10 lakh, it will be allocated in 2:1 basis, that will be given the question. So on that basis we will allocate the depreciation cost. So allocable cost will be allocated as per the information given in the question. Got this point? Correct. The cost will be calculated as per the same principle as discussed above. However, the component of cost will be specific cost or allocable cost of construction. But there are some points which you need to be careful. Any abnormal loss incurred during the process of construction or development will be charged to profit and loss account as an expense. It will never be capitalized. So abnormal loss will never be capitalized. It will be always charged to profit and loss account as an expense. Any internal profit, it is quite possible that some internal profit is added to the cost. For example, there are two departments. One department is transferring some material to other department by adding some profit. So can you say within an entity there cannot be an internal profit? So when you are calculating the entire cost, so that internal profit should be excluded from the cost price. Understood? So any internal profit included in the cost price should be eliminated. One more clarification has been given, that any income and related expenses, just try to understand this, very important. Any income and related expenses of any incidental operation, any income and the related expenses of the incidental operation during the construction and development phase of an item of PP will be recognized in PL. For example, let me take one example. Suppose this is one land in which construction of building is going on, but in two phases. This is phase 1, this is phase 2. So right now phase 2 is idle. No construction activity is going in phase 2. So this phase 2, this land, the idle land, can be given for parking purpose to public at large. So suppose it has been given for parking purpose to public at large. So when you have given for parking purpose, can I say due to this activity which is incidental to the construction of building, can I say some income will be generated and some expense will be incurred. So this income and expense will not be capitalized to the cost price of building, because these are not directly attributable. This will be transferred to profit and loss account as an income and expense respectively. So that is only given. Any income and related expenses of any incidental operation during the construction or development of an item of PP will be recognized in profit and loss account. Correct? So what they have given, income earned during development of PP. If it is directly attributable, income, for example, sale of scrap material from demolition of what building. Suppose you purchase one old building, now to construct a new building you have demolished what old building. So there will be some scrap material. That scrap material can be sold in the market. So some income has been generated, that will be reduced from the cost price of PP, because that is directly attributable cost, that is directly attributable income. So that will be adjusted from the cost price of PP. But if it is not directly attributable, for example car parking rental income, that only I have said, in that case recognized as an income in statement of profit and loss account. Understood this point? This is important, can be asked in exam. Chalega? Yes sir. Now next point is what PP acquired in exchange of non-monetary consideration. Suppose you purchase one property plant and equipment in exchange of another property plant and equipment. In that case what need to be done? So the cost price of PP acquired in that case, listen very carefully, the cost price of PP acquired in that case will be the fair value of asset given up, plus minus cash adjustment. So in that case cost price of PP acquired will be equal to fair value of asset given up plus minus cash adjustment, or fair value of asset received, whichever is clearly evident. Means if I just explain you from, just try to understand one point. Just in this case what our assistant says, कि this entire topic has been divided in two parts. Whether the exchange transaction has commercial substance. This word is very important because in the question they may use this particular term. Exchange transaction has commercial substance, means exchange transaction has some benefit to both the party. So can you say whenever you exchange some item with other item, you will exchange only when that will provide some future economic benefit. But if you are exchanging without any benefit, it means that transaction lacks commercial substance. So it is quite possible exchange transaction lacks commercial substance. Understood this point? So in this case, the cost price of PP acquired, understood? In this case, the cost price of PP acquired, first preference will be fair value, not face value, fair value of asset given up plus minus cash adjustment. When I say plus minus cash adjustment, means plus cash paid minus cash received. So if you have paid some cash, plus it; if you have received some cash, minus it. Correct? Second preference means if the fair value of asset is not given in the question, fair value of asset given up is not given in the question, then you will take fair value of asset received, means PP acquired, asset received. If this is also not given, then last preference will be the carrying amount of asset given up plus minus cash adjustment, understood? So this will be the first preference, this will be the second preference, and the last will be the last preference. So first preference is what? Fair value of, bolo, fair value of asset given up plus minus cash adjustment. Second preference, if the fair value of asset given up is not given, then fair value of asset received, only asset received. There is no need to do any plus minus cash adjustment. Correct? The last will be carrying amount of asset given up plus minus cash adjustment. If the exchange transaction lacks commercial substance, in that case cost price of PP acquired will be equal to only one is given, that it will be equal to carrying amount of asset given up plus minus cash adjustment. So in this case we will not record at fair value, we recorded carrying amount of asset given up, and will not recognize any gain or loss on exchange. Understood this point? Correct? For this I would like to take one question right now. Correct? Just come to question number 6. Entity A exchange land with a book value of 10 lakh, means land is given up, for cash 20 lakh cash received, and plant and machinery valued at 25 lakh. What will be the measurement of the cost of asset received? Consider that transaction has commercial substance. It is given the question that transaction does not lack commercial substance, means it has commercial substance. First you will find out, means in this case what is given up? What is given up? Given up is land. What is received? Received is plant. First, whether the fair value of land is given up. Fair value of land is not given in the question, therefore you can't use that. It means in this case the second preference is what? Fair value of plant received. Whether the fair value of plant received is given, it means the cost price of plant acquired will be equal to the fair value of plant received, that is 25 lakh. The cost price will be equal to 25 lakh. Understood? Then what journal entry will do? So question number 6, what journal entry will do? Batao. Journal entry, you have received plant 25 lakh, account debit. How much cash you have received? Cash you have received 20 lakh. Cash you have received 20 lakh. Yes sir. And what is the book value of land given up? So land will be de-recognized at 10 lakh. So what is the gain on sale? So what is the gain on sale of land? It is 45 minus 10 is equal to 35 lakh will be the gain, and this gain will be transferred to profit and loss account. This gain will be transferred to profit and loss account. Understood? Correct. So in this case, can I say this plant, the cost price equal to fair value of plant received? Why? Because the fair value land was not given. Suppose in the same question, question number 6 only, suppose the fair value, just try to understand, fair value of land is given. Suppose the fair value land is given 8 lakh. Suppose it is given 8 lakh. No, 8 lakh not. Suppose the fair value of land is given how much? Let us say 50 lakh. Let us say 50 lakh. Fair value of land is 50 lakh. Understood? Now, the first preference will be what? Means the cost price of plant. We are finding cost price plant. First preference will be fair value of land given up minus cash received. Fair value land minus cash received. This will be your solution. Minus cash received. So fair value land is how much I have given? 50 lakh. Minus cash received how much? 20 lakh. Therefore the cost price will be equal to 30 lakh. So your answer will be 30 lakh now. Now your answer will be 30 lakh. Even though the fair value of plant is given, but that is not at all important. In this case, the cost price of plant will be the fair value of land given. Normally students do mistake in this type of question. Normally this type of question they will correct, but in this type of question they will do mistake. Have you understood this particular point? So what will be journal entry? Batao. Plant account debit how much? Plant account debit. So what is the cost price? Cost price is 30 lakh. Even though the fair value is 25 lakh, that is not at all relevant. Cost price become 30 lakh. And how much cash? Cash you have received 20 lakh. Means the total consideration is 50 lakh for land. And the land will be de-recognized. Now land will be de-recognized always at carrying amount. Be careful. Here also student do mistake. Land will be de-recognized at carrying amount. Even though the fair value is given. That is not relevant for journal entry. That is not relevant for journal entry. So to land 10 lakh. And the difference gain on sale will be 40 lakh, which will be transferred to profit and loss account. Which will be transferred to profit and loss account. Understood? Have you understood? Correct. Chalo. One more question we'll do with when the transaction lacks commercial substance. Entity exchange car X with a book value of 13 lakh and the fair value is 13 lakh 25,000. For cash of 15,000 and car Y which has a fair value of 13 lakh 10,000. You can see the fair value is given. Fair value is given, but the transaction lacks commercial substance. When the transaction lacks commercial substance, then the fair value information is not at all relevant. In this case, the cost price of car Y will be the carrying amount of car X plus minus cash adjustment. Plus minus cash adjustment. So you can see the book value is how much? 13 lakh. Book value is how much? 13 lakh. Understood? Correct. So book value is 13 lakh. But whether cash has been paid or received. So cash has been received. How much cash received? It is 15,000. 15,000. The cost price of new car will be how much? 12 lakh 85,000. You can see what journal entry they have given. New car account debit 12 lakh 85,000. What is the book value of old car? Book value of old car is 13 lakh. And the difference is nothing but cash received, cash or bank account. So you can see no gain or loss has been recognized. So whenever the transaction lacks commercial substance, we don't recognize any gain or loss initially. Have you understood this particular point? Important for MCQ's point of view. This type of question can be asked in MCQs. Chalega? Have you understood? Bolo. Done. Correct. So this also completed. Now PP purchase for a consolidated price. For example, sometime what happens, we purchase a group of asset. For example, we purchase plant, furniture, land, building together for a consideration. So in that case, what AS10 says, the total consideration will be allocated to all the asset in the ratio of their fair value. So the fair value will be given the question, the entire consideration will be allocated in the ratio of their fair value. So when several items of PP are purchased for a consolidated price, the consideration is apportioned to the various items on the basis of their respective fair value on the date of acquisition. Means entire consideration paid will be allocated to all items in the ratio of their fair value, and that will become the cost price of that particular item. Chalega? Yes sir. Next point is PP held by lessee under finance lease. So any PP which is acquired under lease For that AS 19 will be applicable. So AS 10 says go to AS 19 for understanding this particular point. So the cost of an item of PP held by lessee under finance lease will be determined in accordance with AS 19, not as per AS 10. Okay, sir. So with this we completed our initial recognition. Initial recognition is completed. Now let us come to subsequent recognition. Now we'll come to subsequent recognition. What do you mean by subsequent recognition? Subsequent recognition means recognition at each balance sheet date, at each reporting date. So at each reporting date, at what amount it will measure. For that purpose, AS 10 has given two model, cost model and revaluation model. How many model? Two model, cost model, revaluation model as an option. Means entity can either apply cost model or entity can apply revaluation model. Understood? Yes, sir. So subsequent recognition, what they have said, measurement after initial recognition at each balance sheet date. At each balance sheet date. How many option has been given? Cost model or revaluation model, or revaluation model. What do you mean by cost model? Cost model means what? Cost as we have calculated right now in initial recognition, that will be calculated, less any accumulated depreciation, less any accumulated impairment loss. This will become carrying amount, which will be reflected in the balance sheet on balance sheet date. Chalega? Yes, sir. Now accumulated depreciation is calculated as per AS 10 only, but accumulated impairment loss is calculated as per AS 28. So impairment loss will be discussed under AS 28. Depreciation will be discussed in this chapter only after subsequent recognition. Got this point? Correct. Now when there is a revaluation model, the revaluation model means we need to measure the property, plant, equipment at fair value. At fair value. Don't worry about fair value. Fair value will be given the question. So fair value on revaluation date. From this we'll deduct any subsequent depreciation, subsequent accumulated depreciation, and from that also we'll deduct any subsequent impairment loss. This will become carrying amount under revaluation model. Don't, once again, depreciation will be as per AS 10 and impairment loss will be as per AS 28. Understood? So difference you can see here, it is cost, here it is fair value, here it is cost, it is fair value. Got this point? Chalega? Yes, sir. Now coming to revaluation model, because cost model only we need to understand depreciation and impairment loss, that will be done respectively. But what about revaluation model? Can you say whenever there is a revaluation model, so there will be some accounting treatment for that. That accounting treatment we need to understand. But before that, what AS 10 says that whenever you are applying revaluation model will be applied to all item class wise. All item class wise. For example, it means what? Suppose land is one class and building is one class, correct? So if you have opted revaluation model for land and cost model for building, this is acceptable. Means revaluation model for land and cost model for building is acceptable. Means for one class you can adopt revaluation model, for other class you can adopt cost model. But if you have adopted revaluation model for land, so each item of land in that class you need to apply revaluation model. Means suppose you have land 1, land 2, land 3, land 4, land 5, and all this land you need to apply what? Revaluation model. Means you can't choose for land 1 cost model, for land 2 revaluation model. That is not permissible. That is not permissible. Understood? So if an item of PP is revalued, then entire class of PP to which such item belongs should be revalued. In other words, revaluation should be applied class wise. In other words, revaluation should be applied class wise. Understood is fine? Any doubt? Boliye. Correct. Second, frequency of revaluation. At which interval we should do revaluation? So what AS 10 says that frequency of revaluation depend upon the nature of PP. If the PP experience significant changes in fair value, means if that is experiencing significant changes in fair value, for example land, can land fair value will increase at each interval. In that case, we'll go for annual revaluation. Means do revaluation at the end of each, means at every year. Do revaluation, perform revaluation every year. However, in other case means when the item of PP do not experience significant changes in fair value, in that case revaluation can be done after every 3 to 5 years. Means after every 3 years you can go for revaluation. Understood? This is the frequency of revaluation, not so much important from exam point of view. Coming to the accounting treatment, this is important. So whenever there is a revaluation, now of course there can be either revaluation gain or revaluation loss. Revaluation gain means upward revaluation, revaluation loss means downward revaluation. So in that case, what will be the accounting treatment? So that depend upon whether that item is revalued first time or subsequently also. Means first time revaluation and subsequent revaluation, accounting treatment will be different. So first, is this revaluation for that item first time revaluation? So upward revaluation means revaluation gain. So that revaluation gain will be credited to revaluation reserve. Means it will not be transferred to profit and loss account. Any revaluation gain will be transferred to revaluation reserve, and that revaluation reserve will be shown in the balance sheet under the head reserve and surplus. Correct. So credit revaluation surplus means what journal entry will do? Property, plant and equipment. Property, plant and equipment to what? Revaluation reserve. This journal entry will do. Chalega. Correct. Now downward revaluation means revaluation loss. So revaluation loss will be debited to profit and loss account. Being conservative, can I say we should anticipate all loss, and that will be transferred to profit and loss account. So what journal entry will do in this case? Profit and loss account debit to what? Property, plant and equipment. This journal entry will do. Okay, sir. This is the first time revaluation, simple. Now coming to subsequent revaluation. Subsequent revaluation will depend upon previous revaluation. So subsequent revaluation will depend upon previous revaluation. If previously it was upward, so if previously there was upward revaluation, it means, can I say, we have some balance of revaluation reserve, and now it is again upward. Previously upward, now again upward. So once again revaluation gain will be transferred to revaluation surplus. So any gain should be credited to revaluation surplus. Once again the journal entry will be property, plant and equipment to revaluation surplus, but previously upward, now downward. So now there is a revaluation loss. So what AS 10 says, that revaluation loss will be debited to revaluation reserve to the extent available, and balance loss will be debited to PL. Balance loss will be debited to PL means what journal entry will do? There is a revaluation loss. So first will debit revaluation reserve. First will debit revaluation reserve account debit to the extent available, and balance will be debited to profit and loss account debit to property, plant and equipment. Property, plant and equipment. Suppose there is a revaluation surplus, revaluation reserve of 1 lakh, and the loss is 1,20,000. So out of that 1,20,000, 1 lakh will be debited to revaluation reserve, 20,000 will be debited to profit and loss account. Chalega? Yes, sir. Now previously downward, again now downward. So once again revaluation loss, so revaluation loss will be debited to PL. In this case, simple journal entry. Journal entry will what? Profit and loss account debit to property, plant and equipment. Chalega. But previously downward, now upward. So previously there was a loss, now there is a gain. So this gain, what they are saying, revaluation gain will be credited to PL to the extent of previous decrease. Means credit to PL to the extent of previous decrease means you need to offset the previous decrease, and then balance gain will be transferred to revaluation reserve. Means in this case your journal entry will what? Property, plant and equipment to PL to the extent of previous decrease, and the balance will be transferred to revaluation reserve. Chalega? Understood? Correct. I hope you have understood. This is very simple but very important from exam point of view. Chalega? Now, what will be the accounting treatment of accumulated gain in revaluation surplus? Can you say whenever you are doing revaluation, so there is some accumulated gain in revaluation reserve in the balance sheet. So what about that? For that, accounting treatment of accumulated gain in revaluation reserve, what AS 10 says, that there are two options for the accounting treatment. Correct? There are two options. First option, very easy. What is the easy option? That entire revaluation surplus of an item of PP may be transferred to revenue reserve when the asset is derecognized. When the asset derecognized means when it is sold. So once the item is sold, what journal entry will do? Revaluation reserve will be debited, and the entire gain will be transferred to revenue reserve. Means it can be transferred to profit and loss account or general reserve, etc. Correct? Means you can say free reserve, it will be transferred to free reserve. Chalega? So what journal entry you are doing? Revaluation reserve account will be closed and transferred to revenue reserve. This journal entry will be done when the asset is derecognized. Derecognized means when the asset is sold. Second option means either you do this or this. In this, what happens? Same journal entry will do, but will do during the remaining useful life. Means what they want to say, a portion of revaluation surplus will be transferred return earning during the remaining useful life of the asset, and that portion will be equal to the additional amount of depreciation on revalued asset. Additional amount of depreciation on that revalued asset. Means same journal entry will be done, but that journal entry will be done during the end of each remaining useful life with an amount equal to additional depreciation. The portion of revaluation surplus may be transferred to revenue reserve during the remaining useful life of asset. Amount transferred will be equal to additional depreciation due to revaluation. How to calculate this additional depreciation? A simple formula I will give, ki the entire revaluation surplus, whatever is given, divided by remaining useful life, divided by remaining useful life. So this will be the amount of additional depreciation which will be transferred to, which will be transferred retain revenue reserve during the end of each economic life. Okay, so journal entry remains same. Just try to understand additional depreciation debited PL. So we are not discussing about the accounting treatment of additional depreciation right now. We are discussing that how to close revaluation reserve account by transfer to revenue reserve account with an amount equal to additional depreciation. Understood? Chalega? Means what they want to say. Suppose this is what, this is the date of revaluation. This is the date of, on Y4 we have done the revaluation, and this is Y5, Y6, Y7, and this is the date of derecognition. Chalega? Yes sir. Now suppose the revalued amount $100 lakh या 10 lakh, this is the fair value, and the carrying amount is, suppose revalued amount, write down, suppose revalued amount 7 lakh and carrying amount, write down 4 lakh. So what is the revaluation surplus? 3 lakh. Correct? Understood? And remaining useful life is 10 year. Is 10 year. Correct? Now can you say at the end of this year we'll charge depreciation divided by 10, means 0.7, 0.7, 0.7. The depreciation will be charged on that. So we are not discussing about this. Depreciation will be charged on that. We are not discussing about this. Correct? Are you able to understand? Now in the first option, when the entire revaluation surplus will be transferred retained earning, can I say on this date when the asset is derecognized, entire revaluation surplus, what is the revaluation surplus? 3 lakh. This 3 lakh will be transferred to retained earning. What journal entry will do? Revaluation reserve account debit to revenue reserve. This is revaluation reserve account debit to revaluation reserve account debit to revenue reserve. Understood now? This is revaluation reserve to revenue reserve with what amount? The entire 3 lakh. This journal entry will be done. But if you are following second option, then can I say at the end of each useful life will transfer an amount equal to additional depreciation, and can I say amount equal to additional depreciation will be 3 divided by 10, that is 0.3. 3 divided by 10 means 0.3. That will be transferred from revaluation surplus retained earning. Means here also same journal entry. Journal entry remains same. Revaluation reserve to revenue reserve. How much? 0.3. 0.3. Here also revaluation reserve to revenue reserve 0.3. 0.3 means at the end of each year will pass this journal entry. Got this point? And once the asset derecognized, entire revaluation surplus will be transferred to revenue reserve. These are two options available. If question is silent, always go for easy one. Means entire revaluation surplus will be transferred retained earning on the date of derecognition of the asset. Chalega? Understood? This is also important from exam point of view. Will take one question, but after completion of entire AS. Correct? Yes sir. This technique is not important. This you can leave. Now come to depreciation. Depreciation, no much discussion. Depreciation you all know. Only small point. Let us do. Now depreciation should commence. When to commence depreciation? Depreciation will commence from the date when the asset is ready for its intended use. When the asset is ready for its intended use, not put to use. Means suppose the asset was ready on 1/5/2020 and it was actually put on 30th September 2020. Depreciation will commence from this date or this date. So it will commence from the date when the asset is ready for use, not put to use. Understood? So once the asset is ready for you, you need to commence depreciation. We start charging depreciation from that particular date. start charging depreciation from that particular date. Understood? When to cease depreciation, when to stop depreciation, what AS10 says that depreciation cease when the depreciation cease from a date when the asset is retired from active use and held for disposal. Means it is held for sale, retired from use and held for sale, or when the asset de-recognized, whichever is earlier. Means when the asset is retired from active use and held for disposal but till now not sold, so depreciation will be ceased. Or when the asset is de-recognized, whichever is earlier, correct? So the date the asset is retired from active use and held for disposal, or the date when the asset de-recognized, whichever is earlier. Got this point? Have you understood? Sometime what happened, asset retired from active use but not held for disposal. For example, during COVID-19 period when there was lockdown, can you say it was retired from active use because we were not using the asset, but it was not held for disposal because of course we'll continue our business once the lockdown will over. So it was not held for disposal. In that case, depreciation will not cease. So when it is retired from active use but not held for disposal, in that case will not do any and will not stop charging depreciation for that particular period. So that is given as a clarification. Depreciation does not cease when the asset become idle or is retired from active use but not held for disposal until the asset is fully depreciated. Chalega. Now component method of depreciation. I hope now you know about component accounting for depreciation. For each component we need to find out depreciation. Means suppose there is a plant having component A, component B, component C. So suppose the cost price 10 lakh, 20 lakh, 30 lakh and useful life is 10 year, 20 year, 30 year, correct now? So this will be depreciated separately. So their depreciation will be calculated separately based on component, based on significant component, correct? So of course this I hope you have understood. This will be given, the information of this will be given the question with the component cost price and the useful life of that component. We will charge depreciation on component wise. Now residual value is an accounting estimate. Residual value, the accounting estimate, and the amount of residual value will be given the question. What do you mean by residual value? What amount will rise when the asset is sold at the end of useful life? So that amount is known as residual value. That will be always given the question. If not given the question, we'll assume residual value is nil. Correct? Understood? Yes, sir. Now what is the depreciable amount? Depreciable amount is that amount which is depreciated during the useful life of the asset. So under cost model, it is cost minus residual value. Under revaluation model, it is fair value minus residual value. Correct? So depreciable amount under cost model will be cost minus residual value. Under revaluation model, it will be fair value minus residual value. Correct? Useful life will be normally given the question. However, it can be either based on number of period for which the asset is expected to be used or number of products expected to be obtained from the use of asset. Got this point? Chalega? Any doubt? Means can I say when we have calculated number of period for which the are expected to be used, then we use SLM or RBM. However, for this we use what? Production unit method. For this we use production unit method. However, can I say that depreciation method will be given the question, based on that method we'll calculate depreciation. Okay, sir. Now depreciation method can be straight line method, diminishing balance method or reducing balance method are same. Normally I say reducing balance method, but diminishing balance method, reducing balance method are same. A unit of production method means production unit method. So there are three methods: straight line method, reducing balance method and production unit method. Correct. Now one clarification has been given. Can we depreciate any item of PP based on revenue? Suppose we purchase one property, plant and equipment, and year 1, year 2, year 3, year 4 we have estimated revenue, means it will generate 10 lakh, 20 lakh, 30 lakh, 40 lakh revenue in the next 4 years, and the cost price is 1 crore. So can we depreciate this 1 crore based on revenue? Bola answer is no. Means we cannot depreciate any property, plant, equipment based on revenue. That is inappropriate. Means either we can use SLM or RBM or production unit method, means based on the unit produced, not based on the sales generated. So we cannot depreciate based on revenue. So a depreciation method that is used based on revenue that is generated by an activity that include the use of an asset is not appropriate. Is not appropriate. Chalega. Got this point? Have you understood this point? Yes, sir. Correct. Any doubt? Now, sometime what happened, the residual value is more than carrying amount. Can you see if the residual value is more than carrying amount? In that case, the depreciation will be 0. So, at some point of time, if the residual value is more than carrying amount, then depreciation will be 0. In that case, it does not mean that we have ceased depreciation, because in the next year, subsequently, there may be some depreciation, correct? So, whenever residual value is more than carrying amount, then depreciation can be 0. Then depreciation can be 0. And can I say under production unit method, if the actual production is 0, then also depreciation is 0. Means in some period, if you are not doing any production, then also depreciation will be 0, because in that case depreciation is based on actual production. So if the actual production is 0, your depreciation will be also 0, correct? So under production unit method, depreciation can be 0 when there is no production. So one clarification has been given कि even though depreciation is coming 0, then also it will not amount to ceasing of depreciation. It means we have not ceased the depreciation. In the next year there can be some depreciation. Chalega? Yes, sir. Now, changes in the useful life, residual value and depreciation method. Of course, can I say we should review the residual value, useful life and depreciation method at least at the end of each financial year. Means we should review the useful life, residual value and depreciation method at the end of each financial year, and any changes due to such reassessment will be considered as changes in accounting estimate. And whenever there is changes in accounting estimate, the accounting will be done on prospective basis, not based on retrospective. So it will be done on prospective basis, correct? So any change should be accounted as changes in accounting estimate as per AS5. So of course we need to understand what is changes in accounting estimate as per AS5, but you have done AS5. I hope you know about changes in accounting estimate. Correct? Understood? Means can I say if the useful life, just try to, if the useful life means, let me take one question. Okay, suppose this is Y0, Y1, Y2, Y3, correct? Suppose the cost price is equal to 100 lakh and useful life is equal to 10 year and residual value is equal to 10 lakh. Understood? And we are using SLM. But what is the depreciation यहाँ पर? Depreciation will be 9 lakh. Here the depreciation is also 9 lakh. Now at the end of year 3, we have revised the useful life from 10 year to 15 year. We have revised the useful life from 10 year to 15 year. Now the question is that, just try to understand. The question is that, just listen. Useful life has been revised 15 year. So we'll calculate depreciation, new revised depreciation for 3rd year ki 4th year. This is one doubt where students are not comfortable. Means the depreciation of year 3 will be based on 10 year ki will be based on 15 year. Have you understood this point? So whenever useful life has been estimated, you are re-estimated at the end of year 3, case depreciation is calculated at year end. So this reassessment has been done for year 3 depreciation. Therefore can I say the year 3 depreciation will be based on new useful life, Understood? So in this case, the useful life of 3rd year has been re-estimated 15 year from the beginning, and out of 15 year 2 year has been expired. So it means 13 year is the remaining useful life. So what will be the amount of depreciation? So out of 100 lakh, how much you have depreciated? 18 lakh. So 100 minus 18, it is the revised carrying amount is 82 lakh. Divide by 15 minus 2, and what is the residual value? Residual value is 10 lakh. So this will be new depreciation. 72 minus divide by 13. So 72 divided by 13 is equal to what? The answer will be 5.53. Have you understood? $5.53 will be depreciation of 3rd year. 5.53 will be depreciation of 3rd year. This is one question. Sometimes they ask question in this way. Just try to understand. Normally students are confused. Correct. So this is Y1, Y2 and Y3. They will say at the beginning of year, at the beginning of year 3, at the beginning of year 3 means, can I say at the beginning of year 3 means up to year 2 the depreciation has been calculated. Up to year 2 depreciation has been calculated. Now at the beginning of year 3 remaining useful life is 13 year. Remaining useful life is 13 year. It means, can I say up to year 2 depreciation has been calculated. Now revision has been done at the beginning of year 3. Beginning of year 3 means this year. So it means in this case also revision will be done for third year only, not for second year, because revision has been done at the beginning of year 3. So year 2 depreciation has been calculated. Year 2 depreciation has been calculated. So in this also the depreciation, the revised depreciation will be calculated for third year. So you can see the difference between the question. In this the revision has been done at the end of year 3. So at the end of year 3 means we are calculating depreciation for year 3 only. So at the end of year 3 means we are calculating depreciation for year 3. Therefore we will calculate revised depreciation for year 3 only. In this case at the beginning of year 2 means up to year 2 depreciation has been already calculated, means now revised depreciation will be calculated for year 3 for the next year. So you need to understand the information given the question, and based on that you need to work out. Got this point? Any doubt in this? Have you understood? Yes sir, we have understood. Now coming to land and building, what AS16 says that land and building are two components. So if you purchase land and building together, so land will be separated, building will be separated. On building, can I say will charge depreciation based on the useful life of building. So on building have a limited useful life, and therefore building are depreciated on the basis of useful life of building. But can I say land is not a depreciable asset, because land has indefinite life. So land is not a depreciable asset. Therefore land component will not be depreciated, because it is not a depreciable asset. Chalega. But sometime what happen? If the land portion has a limited useful life, correct? So if the land itself has a limited useful life, then it is depreciated in a manner that reflect the benefit to be derived from it. If the cost of the land include cost of the site dismantling, removal and restoration, that portion of the land asset is also depreciated over the period of benefit obtained by incurring those costs. Means, just try to understand. I will just give one example. Suppose you purchase one land and you have done some improvement on land, and every 5 years you need to do some cost of improvement. So the cost of improvement which has been capitalized land, can I say has a limited life of 5 years. So that portion of the cost which have been incurred for improvement in the land will be depreciated over 5 years. So some portion of the cost of land may have some limited useful life. That limited useful life portion will be depreciated as per their own useful life. Got this point? Yes sir. Chalega. The next point is what subsequent cost means, cost incurred after initial recognition. This is also important topic. Subsequent cost. Subsequent cost means cost incurred during subsequent recognition period. So once the initial recognition is completed, we started using the asset. When you use the asset, some cost will be incurred. There are three types of such costs. First is known as day-to-day servicing cost. These are nothing but routine repair and maintenance cost. Day-to-day servicing cost. Second is known as replacement cost or major inspection cost. Correct? Means you have replaced some of the part of the asset. These are known as replacement cost. Third is what expenses which will increase the life or efficiency of the asset beyond the originally asset life or efficiency. Means you have incurred some capital expenditure which will increase the efficiency of the asset beyond its original efficiency. Correct now. So what AS10 says that this day-to-day servicing cost will be always charged to profit and loss account as an expense, means this will never be capitalized. Day-to-day servicing cost will never be capitalized, and these expenses which increase the life or efficiency of the asset, this will be always capitalized. Doubt will come for replacement or major inspection cost, whether it will be capitalized or charged to profit and loss account. In that case, what our AS10 says that we need to apply recognition criteria. we need to apply recognition criteria, and if the recognition criteria is satisfied, means if it is giving some future economic benefit which will flow to the entity, then it will be capitalized. In that case, can I say if it will be capitalized, recognition criteria is satisfied, then what will do? The cost price, the W, the carrying amount of the asset, in that will add cost price of replacement. Cost price of new asset will be new part will be added, and will de-recognize the carrying amount of old part, means will de-recognize the carrying amount of old part. So WDB of old part will be de-recognized. This will be the revised carrying amount of the asset. This is very important, very important. Means in simple words, suppose, just try to understand, suppose this is what one plant has 4 component A, B, C, D. Can you say you are following component accounting right now? And by following component accounting, you have calculated a carrying amount of each component. Suppose 10 lakh, 20 lakh, 30 lakh, 40 lakh is the carrying amount of each component. Now this component require replacement. So what is the total cost price, total carrying amount of the asset? Is it what? It is 100 lakh. Correct. Now the replacement cost of the new part is suppose 12 lakh. So what you will do in this 100 lakh, you will add 12 lakh and minus what 10 lakh you will do. Means this will be de-recognized and this will be capitalized. So the old part carrying amount will be de-recognized, new part cost will be capitalized. So you can see 100 lakh plus 12 lakh minus 10 lakh. This will become the revised carrying amount of the asset. Got this point? Any doubt? Boliye. Have you understood this? Simple? Yes, sir. We'll take some question for this particular point also. But if the recognition criteria is not satisfied, the entire replacement cost or major inspection cost will be charged to profit and loss account as an expense. Correct. Once again, if there is day-to-day servicing cost, it will be charged to PL as an expense always. When the expenses which are incurred to increase the life or efficiency of the asset, that will be always capitalized. Doubt will come for replacement cost or major inspection cost. In that case, if the recognition criteria is satisfied, if the question is silent, normally we'll assume that recognition criteria has been satisfied, then capitalize. In that case, what we'll do? First, we'll add the cost of replacement, correct, and minus the carrying amount of old part from the carrying amount of the principal asset. Chalega? Yes, sir. If not satisfied, then charge to PL as an expense. Yes, sir. Correct. Now, next point is impairment loss. Impairment loss will be done as per AS 28. We'll do as per AS 28. Correct. But I hope you have done AS 28 to know how to calculate impairment loss. Impairment loss is nothing but carrying amount minus recoverable amount. Carrying amount minus recoverable amount. If recoverable amount is given and that is less than carrying amount, the difference will be impairment loss that will be charged to profit and loss account. Okay. Now coming to retirement and disposal. Retirement and de-recognition. Retirement means when it is retired from active use and now held for disposal. In that case, what AS 10 says that it will be carried at carrying amount or NRV, whichever is lower. Means you need to measure NRV. NRV means net realizable value. So net realizable value will be given the question. So suppose the carrying amount is 10 lakh and NRV is 9 lakh. So it will be carried at 9 lakh and the expected loss of 1 lakh will be charged to profit and loss account. Expected loss of 1 lakh will be charged to profit and loss account. The item of PP retired from active use and held for disposal. Both the condition, retired from active use and held for disposal, should be stated at lower of their carrying amount and net realizable value. Any write down, how much write down in this 1 lakh is write down in this regard should be recognized immediately in the statement of profit and loss. Correct. Now coming to de-recognition. De-recognition means when it will be de-recognized from the financial statement, when it will be deleted from the financial asset. So it will de-recognize either on disposal of the asset, when you have disposed it, on disposal of the asset, or when no future economic benefit are expected to flow from is either on use or on disposal. Means there is no future economic benefit from that asset, so of course it will be de-recognized. So either on disposal or when no future economic benefit are expected from the use or disposal of that particular item or PP, then it will be de-recognized. So can you say whenever de-recognition we need to find out gain or loss on sale, gain or loss on de-recognition. So how to find out sale proceed? That will be given the question. minus any selling expenses, means cost of disposal. Any cost of disposal deducted, this become net sale proceed. From this minus carrying amount of the asset sold on the date of sale, and this will be what? Gain or loss on sale. This gain or loss will be transferred to PL and it cannot be adjusted with revaluation surplus. Be careful, it cannot be, cannot be adjusted with revaluation surplus. Even though it is available, it cannot be adjusted with revaluation surplus. This gain will not be transferred to revaluation surplus. This loss cannot be adjusted with revaluation surplus. This will be entirely transferred to profit and loss account. Got this point? Have you understood? We'll take one question based on this also. Correct? Now, coming to the next point, this standard is thoda sa big because it covers lot of points. AS10 is only one accounting standard which is equivalent to international accounting standard. Therefore, it is thoda sa big, means detailed discussion has been done because this is newly revised. Therefore, I am taking this accounting standard initially only. The other accounting standard are very easy. Chalega. Now, changes in the cost price of PP. Changes in the cost price of PP means initially you have recognized property, plant, equipment at a certain cost. Now that cost price has been changed. One of the major reason of the cost changes in the cost price is in the changes in the decommissioning, restoration, similar liability. Because can I say DRSL, changes in the initial estimate DRSL, means suppose initially you have estimated that your future expenditure will be 50 lakh. And based on that the present value was suppose 40 lakh. So you have capitalized 40 lakh. But can I say after 1 year there may be some changes in the estimation. Now it becomes 60 lakh and the present value now becomes suppose 42 lakh. So there is changes in the present value to what? Whether it will affect the cost price of PP. That is a question. Correct? So reason for change, it can be changes in liability, means of course these are not so much important. The one of the major reason is changes in the initial estimate of DRSL. So I don't know whether it is important, not important. It is important, not important, but it is a part of AS10. So in that case, what our AS10 says that this has been divided in two parts. Very easy, just listen. Once comes in exam, you can do it by own. If the related cost is measured by using cost model, means if you have adopted cost model and there is an increase in liability, means liability increases, provision amount increases, then whatever increase in liability will be added to the cost price of asset. Simple, should be added to the cost price of related asset. Should be added to the cost price of related asset. If decrease in liability, so should be deducted from the related cost price of asset. Simple, means in this case what journal entry will do? PP account debit to provision. In this case what journal entry will do? Provision will decrease. So provision account debit to property, plant and equipment. Understood? Now suppose one special case, suppose the carrying amount of PP is 10 lakh but decrease is 12 lakh. Quite possible, means decrease in provision is 12 lakh but the carrying amount of PP is 10 lakh. Then whatever extra decrease, that will be transferred to PL as a gain. So if the decrease in liability exceeds the carrying amount of PP, so any excess decrease will be transferred to profit and loss account. Okay, that is only given. If you want to read. Now if related asset is measured using revaluation model, then entire adjustment will be done with the revaluation surplus available. Correct? Means if there is an increase in liability means loss. In that case what journal entry will do? Will do revaluation surplus account debit to the extent available. If to the extent available, and the balance will be debited to profit and loss account to provision. This journal entry will do. Means it will not affect property, plant and equipment account. So when there is an increase in liability, so there is a loss. So that loss to be debited to the extent, that loss to be debited to revaluation surplus to the extent available. Any balance loss will be debited to profit and loss account. Understood? So journal entry क्या हुआ? Revaluation surplus account debit, profit and loss account debit to provision. Correct? If there is a decrease in liability, so okay, decrease in liability is a gain. Decrease in liability is a gain. So what journal entry will do? Provision account debit. But for example, suppose there was a downward revaluation previously, so there was some loss which was already debited to PL account, so it will be first credited PL to the extent of previous decrease and the balance will be transferred to revaluation surplus. Meaning it is as simple as what we have done for subsequent revaluation under the accounting treatment of revaluation. Same thing has been done. Correct? Understood? Now, I don't know whether it is important or not important. Till now, no question have been asked from this particular topic, but it is also a part of AS 10. Therefore, I have done. Thoda thoda you have understood? Yes, sir. Correct. Now, coming to the scope. What is the scope of this chapter? So, this chapter AS 10 is not applicable. It is not applicable to biological acid. It is not applicable to biological acid. Now, what is the meaning of biological acid? Biological acid means living animal and plant related to agriculture activities. So, living animal and plant, this AS10 is not applicable. Correct. So, any living animal, any living plant, AS10 is not applicable other than bearer plant. Means there are some bearer plant, then AS10 is applicable. Means for bearer plant, AS10 is applicable. Apply, but for living animal plant which are not bearer plant, AS10 is not applicable. AS10 is not applicable. And to the wasting acid means the right to extract mineral resources, coal mines, etc. That is known as wasting acid. To wasting acid also in the AS10 is not applicable. Accounting standard 10 is not applicable. So biological acid, bolo biological acid other than bearer plant, AS10 is not applicable. Wasting acid, AS10 is not applicable. So now of course we need to understand what is the meaning of bearer plant. What is the meaning of bearer plant? This also I don't know whether it is important, not important, but we need to do because it is a part of accounting standard 10. Now what do you mean by bearer plant? So bearer plant is a plant, living plant. It is a living plant when three conditions are satisfied. So bearer plant is a plant when three conditions are satisfied. First condition, which is used in production or supply of agricultural produce, which is used in production or supply of agricultural produce. Let me take one example of mango tree. Mango tree. It is the first condition satisfied because it is used in production of mango, which is an agricultural produce. The first condition is satisfied for mango tree. Second, which is expected to be a produce for more than one period. The second condition also satisfied because in these mango will be produced for more than 1 year. Therefore, second condition also satisfied. Third, which are not held for sale as agriculture produce. Means this plant itself is not an agriculture produce. So, okay, this plant will never be sold as an agriculture produce. Therefore, third condition also satisfied, and therefore this mango tree is an example of bearer plant. And to mango tree, AS10 will be applicable. AS10 applies. So, what are the conditions? Can we repeat? First, which are used in the production or supply of agriculture produce, which are expected to be a produce for more than 1 year. Third, which are not held for sale as an agriculture produce. Of course, it can be sold as a scrap sales at the end of useful life, but that is not to be sold as an agriculture produce. Understood? Means there are some example has been given. The following are not a bearer plant. Means if I say plant cultivated to be harvested at agriculture produce, for example, annual crop. If plant cultivated to be harvested as an agriculture produce means any plant which is used for supply, means for wood or any timber, etc. Means if you say there is some plant, bamboo tree can I say itself is used as an agriculture produce. That bamboo will be used for the construction of many furniture, etc. So for example, tree grown for use as lumber means as an wood. That tree is actually required for that wood. Understood? That is what not a bearer plant, because that in that case plant itself is an agriculture produce. Second, plant cultivated to produce agriculture produce when there is more than a remote likelihood that the entity will also harvest and sell the plant as agriculture produce other than incidental scrap sale. Means sometime what happened, any plant that are cultivated both for their fruit and their wood, lumber means wood, correct now. So the tree are cultivated both for their fruit as well as for their lumber. In that case, it will not be a bearer plant because the plant itself is an agriculture produce. In that case, the plant itself is an agriculture produce. In that case, correct now. I can give one example of suppose banana tree. Banana tree can be used for banana, and as well as tree itself is an agriculture produce in that case, because tree can be harvested for as an agriculture produce. So in that case, banana tree will not be a bearer plant. Annual crop means maize, wheat, annual crop, because that will produce agriculture produce for not more than 12 months. Therefore, that will also not meet the definition of bearer plant. So these are outside the scope of AS10. Only bearer plant will be under the scope of accounting standard. It can be asked in MCQs. This type of question can be asked in multiple choice question. However, I don't know whether it is important, not important. Chalega. General disclosure you can read by your own, because normally they will not ask the disclosure theoretical point. This you read by your own. These are disclosure requirement as per accounting standard 10. With this we completed AS 10 completely. AS 10 has been now completed completely. Now we'll take the questions. We'll take one by one each question. Have you understood AS 10? Respond fast. AS 10. Now let us come to the questions. So you can see I have taken many questions, 9 questions I have taken, 2 questions already I have done. 7 questions will do. Now based on whatever we have studied, we'll do the 7 question. A property costing rupees 10 lakh is brought in 2001, is estimated total physical life is 50 years. Physical life means economic life. We call it economic life. Economic life means it can be used for 50 years. It will generate economic benefit for 50 years. However, the company consider it likely that it will sell the property after 20 years. So 20 years become useful life. 20 years become useful life means from the company's point of view, for how many years it will use the asset. So they are expecting to sell the asset after 20 years. So useful life is 20 years. Now you only say will depreciate asset based on 20 year, 50 year, based on 20 year, not based on 50 year. So 50 year is not relevant. Useful life is relevant. Chalega. The estimated residual value in 20 year time, they have given also 20 year time based on 2001 prices is case A 10 lakh, case B 9 lakh. So case A, just try to understand. In this case, residual value is equal to the cost price and therefore no depreciation. No depreciation. Even though it is used, but can you say the residual value is equal to or more than carrying amount, therefore no depreciation. But in case B it is 9 lakh, so what will do? 10 lakh minus 9 lakh, 1 lakh divided by 20, how much? So 1 lakh divided by 20, so that is 5,000. 5,000 with the annual depreciation. 5,000 will be the annual depreciation. You can see case number A there is no depreciation. Case number B, the depreciation is how much? 5,000. Understood? Chalega? Any doubt? Then come to question number 18. ABC Limited is installing a new plant at its production facility. It has incurred this cost. Cost of the plant, cost as per the supply invoice plus taxes. This will be capitalized. Initial delivery and handling cost. This will be also capitalized. Cost of site preparation. This will be also capitalized. Consultant used for advice on acquisition of plant. So consultant used for advice. So any professional fee. This will be also capitalized. Interest charge paid to supply of plant for deferred credit. If nothing has been given about the qualifying asset from this chapter point of view, nothing has been given about substantial period of time, so always will assume that this interest charge will be, this interest component will be charged to profit and loss account. So this will not be capitalized because the question is not clear about the qualifying asset. If it is clear about qualifying asset, then it can be capitalized also, correct? But nothing, no information has been given. This will be charged to profit and loss account as an expense. Okay. The estimated dismantling cost to be incurred after 7 years, 3 lakh, but you can see they have not given present value. They have not given present value, so we'll assume this 3 lakh is present value. We'll assume this is 3 lakh is present value, but actually you can see this is a cost to be incurred after 7 years. This is future expenditure. We want present expenditure, correct now? So, but if nothing has been given, we'll assume this 3 lakh is present value and this will be capitalized. Operating loss before commercial products. Any operating loss before actually started using it, that is the cost incurred after the asset ready for use, that will never be capitalized. That will never be capitalized. So you can see this all will be capitalized and the sum total will be 43 lakh. This will be the cost price of the asset. Check kar lo. It is 25 plus 2 plus 6 plus 7 plus 4. It is 6. How much? ₹43 lakh. 43 lakh came? Yes, sir. Chalo. Question 20 is very good question. Let us read. Skanda Limited acquired a machinery for rupees 2 crore 50 lakh 5 years ago. 2 crore 50 lakh 5 years ago. Depreciation was charged at a rate of 10% on SLM basis. On SLM basis, 10% on SLM basis, 10% always on cost. Be careful. When it is RBM reducing balance, so 10% will be on carrying amount. Chalega. Useful life being 10 years. At the beginning of year 3, means after 2 years, so first will charge depreciation of 2 years. The machinery was revalued at 3 crore. with the surplus of revaluation being credited to revaluation reserve. This stuff we know, it will be credited to revaluation reserve. Depreciation was provided on revalued amount over the balance useful life of 8 years. So of course after 2 years the balance life will be 8 years only. The machinery was sold in the current year for 1 crore 12 lakh 50,000. 1 crore 12 lakh 50,000. So what is the current year? They have not given. Correct? Give the accounting treatment for the above company's account. What will be the treatment if the machinery fetch only 42 lakh 50,000? Means they have asked two questions. If the machinery is sold, for rupees 1 crore 12 lakh 50,000, then what is the answer? If the machinery is sold at rupees 42 lakh 50,000, then what will be your answer? Correct? But I think the question have not given current year. What is the current year? They have not given. The appreciation provided on revalued amount over the balance useful life of 8 years. Balance useful life of 8 years. Okay. Acha, 5 years ago. It is 5 years ago. Means can say after 2 years, another 3 years has expired. So has been sold in the current year. Has been sold at the current year. Means after 5 years. It has been sold after 5 years. Be careful. When you are not reading the question carefully, you may miss some information. When you read the question carefully. Chalega. So can you say first original cost is 2 crore 50 lakh. Then we charge first 2 year depreciation. So it will be 2 crore 50 lakh into 10% into 2. So it will become how much? 50 lakh will be depreciation. So this will become the carrying amount. Carrying amount before, at the beginning of third year you can say, or before revaluation you can say, at the beginning of third year. So at the beginning of third year before revaluation it is 2 crore. What is the revalued amount? Fair value they have given 2 crore. So what is the revaluation gain? Revaluation gain become 1 crore, and that 1 crore will be transferred to revaluation surplus. So you can see add revaluation surplus, 1 crore will be added, and the revised carrying amount will become 3 crore. Revised carrying amount become 3 crore. Now this 3 crore will be depreciated for the remaining 8 years. But how many out of 8 years? 3 years has been expired. So we'll do into 3 by 5. So 3 crore into 3 by 5. This will be subsequent depreciation, and this become the this will become carrying amount at the end of 5 years. This become carrying amount at the end of 5 years. So 1 crore 87 lakh 50,000 become the carrying amount at the end of 5th year. This much I hope it is very clear. Correct? Now they have sold at 1 crore 12 lakh. So first they have sold at 1 crore 12 lakh 50,000. So what is the loss? Loss batao. 1 crore 87 lakh 50,000 minus 1 crore 12 lakh 1 crore 12 lakh 50,000. So loss is coming how much? 75 lakh. So in the case 1, means this is case 1, this is case 2. So in case 1 the loss is coming 75 lakh. My question to you all, this 75 lakh whether it can be adjusted with revaluation surplus. Means here only you can do mistake. Whether this loss of 75 lakh whether it can be adjusted with revaluation surplus. No. Any gain or loss on sale will never be adjusted with revaluation surplus. It will be transferred to profit and loss account. So this will be transferred to profit and loss account, and on derecognition of asset the balance of revaluation surplus will be transferred to revenue reserve. That is also point. So 1 crore will be transferred directly to retained earning, or you can say revenue reserve. Retained earning or revenue reserve. Understood this point? Have you understood? Only to explain what will be journal entry. Journal entry kya hoga? What will be journal entry for this particular? Suppose they ask journal entry. So journal entry what? For case number A, bank account. So it was sold at 1 crore 12 lakh 50,000. To property, plant and equipment. What is the carrying amount? It is 1 crore 87 lakh 50,000. 1 crore 87 lakh 50,000. Okay. The loss will be transferred to PL. The loss transfer to PL debit करेंगे. 75 lakh will be transferred to PL. And we need to also close revaluation surplus account. We will pass one more journal entry. Revaluation surplus account debit. How much? 1 crore. This account will be closed and will be transferred to revenue reserve, or you can say retained earning also. Revenue reserve is 1 crore. This account will be closed and transferred to revenue reserve. Understood? This journal entry we will do. Have you understood this point? 100% expected question. Second situation, Now they are saying it has been sold at what amount? 42 lakh 50,000. The only one change, you need to find out the loss. So 1 crore 87 lakh 50,000 minus what? 42 lakh 50,000. That is coming what? 1 crore 45 lakh loss. This loss will be also transferred to PL account, and revaluation surplus will be closed by transfer to retained earning or revenue reserve. Understood? Important question can be asked in exam. Can be asked in exam. Understood? Correct. One more question. Come to question number 21. Means this is 21 of my question bank. I have not changed the number. Correct. I have not changed the number, so that if you are using my question bank, then it will be easy for you to get that question. Chalega. Now, Excel Limited install a new plant, not a qualifying asset. Already given not a qualifying asset. In the last question when we have done, it was not mentioned. So it was a general assumption that it is not a qualifying asset. Correct. At its production facility and incur the following costs. Cost of the plant as per the supply invoice 30 lakh will be capitalized. Initial delivery and handling cost will be capitalized. Cost of site preparation will be capitalized. Consultant fee will be capitalized. Interest charge will not be capitalized. Estimate of dismantling and site restoration cost 50,000 after 10 years, and the present value is 30,000. Now in this question present value is given, so this 30,000 will be capitalized, 50,000 will not be capitalized. Operating loss will not be capitalized. Operating loss will not be capitalized. So this interest and this operating loss will be charged to profit and loss account as an expense immediately. Chalega. Now what they have given, company identified motor installed in the plant as a separate component, and the cost of rupees 5 lakh purchase price and other costs were allocated to them proportionately. Means out of this 30 lakh, what is the cost price? 5 lakh. 5 lakh belong to motor. Means this is other component and this is the motor component. So motor component become how much? Can you see it is 1/6 of total cost? So we can say this is 1/6 of total cost. So this other cost which has been capitalized, 1/6 will be attributable to what? Motor. 1/6 you need to attribute to the motor. Understood? Is fine. So you need to find out what is the cost of the motor component, because that will be depreciated separately, because their remaining useful life may be different from other component. We need to apply component accounting for that. We need to apply component accounting for that. Are you able to understand? Boliye. Once you are able to understand, can you say yes sir, we are able to follow you? Chalo. Then what they have given? The company estimate the useful life of plant and those of motor 10 years and 6 years. The plant it is 10 years, motor it is 6 years respectively, and SLM method of depreciation used. Okay. At the end of 4th year, the company replaces the motor installed in the plant at a cost of 6 lakh. An estimated useful life of the new motor to be 5 years. So it was replaced by new motor. The cost price new motor means you need to find out the carrying amount of old motor, then de-recognize that old motor and add what? The cost price of new motor. This is replacement cost. Also the company revalue the entire class of fixed asset at the end of 4th year. Means after replacement they have revalued. Revaluation was done as a whole is 25 lakh. 25 lakh is the revaluation price, means fair value. Then at the end of year, the company decided to retire the plant from active use and also dispose the plant as a whole for rupees 6 lakh. They dispose the entire plant for rupees 6 lakh. There is no changes in dismantling and the site restoration liability during the period of use, but there is no changes in DRSL. If there is changes in DRSL, we need to do that adjustment also. That point also I have said. You are required to explain how the above transaction will be accounted in accordance with AS 10. Correct? So can you say first we need to find out the cost price. The cost price is coming how much? 30 lakh plus 1 lakh plus 2 lakh plus 50,000 plus 30,000. This becomes 33 lakh 80,000. You can see 33 lakh 80,000. Okay, this 33 lakh 80,000 will be divided in two components. Means you write down plant, yeah, you write down motor and plant, yeah, other part. Now this 33 lakh 80,000 will be divided. 1/6 will be allocated. Divide by 6. Is it coming how much? 5 lakh 63,333. and balance 33 lakh 80,000. How much? It is 28 lakh 16,667 will be allocated to other. Have you understood this point? This is the cost component. You can see they have also allocated that only 5 lakh 63 and 28 lakh 16,000. Understood? Now this will be depreciated for the how many year? Useful life is equal to what? Here 6 year. Here the useful life is 10 year. So what is the annual depreciation? Annual depreciation will be, this is divided by 10. So it is coming 2 lakh 81,667 and this will be 5 lakh 63,333 divided by 6. That is coming 93,889. Correct. Understood. And 4 year has been expired, means at the end of 4 year this is going to be replaced. So we need to find out carrying amount. So at the end of what is the accumulated depreciation of 4 year? So you will do multiplied by 4. This also multiplied by 4 you will do. Correct. So into 4 how much it is coming? This is coming 3 lakh 75,000. 3,75,555. So what is the carrying amount? Carrying amount will come 5,63,333. It is coming how much? This will be 9. This will be 5,63,333 minus 3,75,555. This will come 1,87,778. This become the carrying amount of the motor part. And what is the carrying amount of this part? This will be 281,667. 281,667 into 4. This is coming how much? The accumulated depreciation of 4 year will be 11 lakh. This will come 11 lakh 26,668. Correct. Now minus this minus this will come how much? 28,16,667 minus 112. You can say 6,667 only. You can say 1 lakh. It is what? 11 lakh 26,667. So that the difference will not come. Correct. So this is coming how much? It is coming 16 lakh 90,000. 16 lakh 90,000. Understood? So now this will be derecognized. This will be derecognized. So this will be derecognized, and on this we'll add what? On 16 lakh 90,000 we'll add what? The cost price of new. The cost price of new component. The cost price of new component. How much it will be added? You can see they have also calculated this carrying amount of the motor 1,87,778. That only we have done. This will be derecognized. Correct. And this will be lost, and this loss will be transferred to profit and loss account. Correct. And you can see this is 16 lakh 90,000. This is 16 lakh 90,000. The carrying amount of plant at the end of year 4. At the end of year 4. Can you say in this will add what? In this will add what? The cost price of new component. New component how much given? That is 6 lakh. 6 lakh will be added. So can you say in this now after this will become 6 lakh. This component will become 6 lakh, and this is 16 lakh 90,000. 16 lakh 90,000. Now it has been revalued. What is the fair value given? Fair value is 25 lakh. So at the end of 4th year the fair value is 25 lakh. Okay, so out of 25 lakh 6 lakh will be this. So fair value of this will be 6 lakh because this was purchased initially only. So 25 minus 6 how much? 19 lakh will be this. So what is the revaluation gain? So revaluation gain will be how much? Minus kar do 19 lakh. Revaluation gain will be 2 lakh 10,000. The revaluation gain will be 2 lakh 10,000, and this will be transferred to revaluation surplus. So 2 lakh 10,000 will be transferred to revaluation surplus. Understood? Up to this, any doubt? Now this 6 lakh will be depreciated for how many life? And this is 19 lakh will be depreciated for how many life? Correct. Now so the remaining, the life of this was 10 year. Out of 10 year how much was expired? 4 year was expired. So this the remaining life is 6 year. For this the new life is given 5 year. The new life has been given 5 year. If you see, if you read the question, they have given what? He also the company revalue the entire class of fixed asset at the end of year 4. The revalued amount of plant is 25 lakh, and at the end of year 8, correct. Now the new plant, acha, where is that? The useful life of new motor is 5 years. So this is divided by 5. and this is divided by 6. 6 year is 10 out of 10, 4 year gone, so 6 year. So what is the depreciation? Now depreciation is what? 6 lakh divided by 5. How much? It is 1,20,000. 1,20,000. This is 19 lakh divided by 6. How much? It is 3,16,667. Correct. Now they are saying at the end of 8 year, at the end of year means initially 4 year, again 4 year. So 4 year subsequent depreciation will come. So we'll do into 4. Into 4, how much is coming? 1,20,000 into 4, it is 4,80,000. This is the total depreciation is coming 4,80,000. In this, what is the case? 316667 into what? 4. This is coming how much? This is 12,66,668. 12,66,668. This is the total depreciation of the other component. So this minus this will become carrying amount. This carrying amount is 1,20,000. Got this point? Boliye. And this carrying amount is how much? 19 lakh minus 12,666. 12,66,668 is equal to how much? It is coming 6,33,332. So total carrying amount become plus 1,20,000. It will become 7,53,332. And this was sold at what price? Check karo. First you check it whether it is coming correct or not. You can see the total means I don't think so. This should be again allocated. This is, I don't know why they have allocated. The allocation is not required because it has been disposed of. The entire has been disposed of. So this we have calculated correctly only. You can see this is coming how much? Same. Now this is what? 7 lakh this. Now what is the disposal value? What is the sale price? Because now allocation is not required. Allocation required only for component accounting. Sale, that the sale price they have given. What is the sale price? Sale price already they have given how much? The entire asset was sold at rupees 6 lakh. So it was sold at rupees 6 lakh. And the loss will be transferred to PL. The loss is become what? How much? 1,53,332. This become loss. So entire loss will be transferred to profit and loss account. I don't know why they have given this. This allocation is actually not required. You can see the entire loss is what? The total loss is what? The sum total of this will be how much? Check karo. 1,28,907 plus 24,425. The same 1,53,332. That only we have calculated. However, if you want to allocate, you can allocate because this sale price can be once again allocated in the ratio of 1/6 and 5/6. Correct now. In that way we can allocate. However, this allocation is not required. Conceptually that is wrong because for sale of asset, when we do sale, so sale we have done the sale of entire asset. When you have done the sale of entire asset, then why allocation required? Allocation is not required in that case. Understood? So I will say direct minus sale price, this will loss, and on derecognition of asset, the revaluation surplus. What was the revaluation surplus? Revaluation surplus was 2,10,000. That will be also transferred to revenue reserve. So that you write down the revaluation surplus of rupees 2,10,000 will be transferred directly to retained earning. Chalega. So from my point of view, this allocation is not required. However, they have allocated in the ratio of carrying amount, and then they have given allocation can be also done in the ratio of what? 1/6 and 5/6. Initially what we have done, but this is bakwas point. I think allocation is not required. Chalega. Understood. This also done. Can we take one more question? Yes. One more question. Come to 22. What they have given? Bharat Infrastructure Limited acquired a heavy machinery at a cost of 1,000 lakh. The breakdown of this component is not provided. Means the entire cost price 1,000 lakh, but the breakdown is not provided. The estimated useful life of machinery is 10 years. At the end of year 6, the turbine, which is a major component of machinery, needed replacement. Once again, replacement wala question. As the further usage and maintenance was uneconomical, the remainder of the machine is in good condition and is expected to last for the remaining 4 years. The cost price of new turbine is 450. The cost price of new turbine is given 450. Give the accounting treatment new turbine, assuming SLN depreciation and a discount rate of 8%. Now, whenever just try to understand, in this case, breakdown is not given. But can I say this is the cost price of new turbine at the end of 6th year? Means this is the future value. So if you want to find out the present value on the initial purchase date, so you can discount it and you can find out present value of this. Present value of this at 8% discount. Are you getting? Means what they want to say? This is y0, y1, y2, y3, y4, y5. Means y0, 1, 2, 3, 4, 5, 6. Correct. In this, the cost price was 1000. Can I say it has two components? One is the turbine and one is the balance other component. Correct. Now at this point of time they have given new turbine is 450, but a question mark, this has not been given. So can I say we can't do the de-recognition of this because we don't know the carrying amount of this. So to find out carrying amount, you need to find out cost price of this turbine, which was not known at the beginning. So we'll say the present value of this will be the cost price. So present value of this at 8%. So 1.08 divide 6 time equal to, because 6 year, 1 year, 2 year, 3 year, 4 year, 5 year, 6 year. So 1, 2, 3, 4, 5, 6. It is coming 450 into 0.630. So 450 into 0.630, 450 into 0.63, how much is coming? 283.5. So it is coming 283.5. So if you have understood this, can I say you can find out the carrying amount? Means now what you will do, ki turbine and the other, what is the cost price? Cost price what? The total cost was 1000. Out of that, how much you have allocated to turbine? 283.5. The balance become 1000 minus 283.5. So balance is 716.5. Now we'll do depreciation for 6 year, total 6 year. So you'll do 716 divide by 10. Whatever the total useful life was 10 year. Divide by 10 into 6 you'll do. So this become 429.9 and this will be 283.5 divide by 10 into 6. This will be 170.10. So this is coming how much? 283.5 minus 170.10. This is coming 113.4 and this is 716.5 minus 429.9 is equal to coming how much? 286.6. Correct. So this become the carrying amount. This will be de-recognized. This will be de-recognized, and in this case we will add what? The cost price of new. So cost price how much will be added? Batao. We'll add 450. So 450 will be added. So plus 450, how much it is coming? 736.60. So this will be the carrying amount after the replacement cost. This will be carrying amount after the replacement cost. Have you understood this point? Calculation, then I think that they have only given. You can see 736.6 means they have done some approximation. Same way they have calculated. Understood? Have you understood this point? Boliye. Chalega. One last question. Come to question 36. A Limited has the following asset. Calculate depreciation for the year ended 31st March 2020 for each asset as per AS10. So calculate depreciation for each asset for the year ended 31st March 2020 for each asset. Machinery purchased for 10 lakh on 1st April 2015. The residual value after useful life of 5 years based on 2015 price is 10 lakh. So you can see that asset has been purchased for rupees 10 lakh. Correct? And the residual value is also what? 10 lakh, and therefore can I say no depreciation, because residual value is equal to the cost price and therefore nil depreciation. Nil depreciation. This question was asked in exam for 5 marks. Land for 50 lakh. Land is not a depreciable asset, therefore depreciation nil. Then the machinery is constructed for rupees 5 lakh for its own use. Useful life is 10 years. Construction is completed on 1st April 2019. The construction is completed on 1st April 2019, but the company does not begin using the machinery until 31st March 2020. Can I say even though they have not used it, but it was ready for use on 1st April 2019? Because it was ready for use for 1st April 2019, can depreciation will charge for that year, and the useful life is 10 year. Useful life is 10 year. Correct? So can I say it will be 5 lakh divided by 10. 50,000 depreciation. Even though asset is actually not put to use, then also depreciation will charge, and you can see 50,000 will be the depreciation amount. Chalega. Then machinery purchase on 1st April 2017 for rupees 50,000 with a useful life of 5 years and residual value nil. On 1st April 2019, management decided to use this asset for a further 2 years. Means there is changes in the life. Correct. So on 1st April 2019 means up to 18 to the depreciation charge as per the old useful life. So 50,000 divided by 5, 50,000 divided by 5, 10,000 for 2 years. Already depreciation has been charged. So 20,000 depreciation is charged for first year and second year. So what is that carrying amount? Carrying amount become 30,000. Carrying amount become 30,000, and now they have decided to use the asset for further 2 years. Means the remaining useful life is only 2 years. There is a revision and change, so this will be divided by 2. So next year depreciation will be 15,000, not 10,000, 15,000, and you can see the depreciation is what? 15,000. This is nothing but changes in accounting estimate. Understood? With this we completed all the question also of AS 10. AS 10 is now completed from our point of view. Have you understood AS 10? Respond fast. Any doubt? Chalo. So we'll take a break at 2. We'll take a break at 2. So can we take one more small AS? We'll take a small AS. We'll take AS 12. AS 12 means accounting for government grant. AS 12 accounting for government grant. Now very simple accounting standard from exam point of view. Correct? Okay. So of course this standard deals with the accounting for government grant. So what do you mean by government grant? Okay, so first we need to understand what is the meaning of government. So in this chapter, government does not mean only state government, central government. Government means what? Here government refers to government. When I say government, government means both state government as well as central government. And it will also include government agencies. Government agencies, so any government agencies of the government will be also government for this chapter. And it will also include similar bodies, whether local, national or international bodies. So similar government agencies, whether it is local, national, international. For example, you receive some donation from WHO, World Health Organization. That is also what? Government. That is also a government for this particular chapter. Chalega? Yes sir. Now what do you mean by government grant? Government grant means any help. Help means assistance. So any assistance from the government. So government grant is an assistance from government. Now you have understood the meaning of government. So any assistance from government, either in cash or in kind, means either that has been received in cash or it has been received in what? Kind. Means either monetary consideration or non-monetary consideration. Correct? To an entity for a past or future compliance with certain conditions. Means whatever grant we have received can be for some past compliance. Means in past you have done some activity for which you are receiving some grant today, or in future there will be some compliance need to be performed by you, for that you are receiving grant right now. So it may be for past compliance or future compliance with certain condition. So there may be some condition or there may not be certain condition. If there is a condition, so the condition need to be satisfied, that condition need to be satisfied. So this is the meaning of what? Government grant. Can you repeat with me? These are assistance from government, either in cash or in kind, either in cash or in kind to an entity for past or future compliance with certain condition. Correct. Now however, one clarification has been given. Government grant do not include any government assistance to which monetary value cannot be placed. For example, if you receive some service, free services from the government, free services. For example, you receive some free technical advice from the government. Free advertisement means free services you have received from the government. So in that, can you see the monetary value cannot be placed, means it cannot be expressed in money value. In that case, it will not meet the definition of government grant and AS20 will not be applicable. The example, free technical or marketing advice by the government, because can you say it is not in cash, not in kind, so it will not meet the definition of government grant and therefore it is outside the scope of this chapter. Correct? Or any normal trading transaction with government. For example, you purchase some goods from the government or government agencies at a discount, that discount is under a normal transaction, that therefore the discount is not a government grant. Understood? Yes sir. The recognition of government grant, what AS12 says, the government grants should be recognized when two conditions are satisfied. How many conditions? Two conditions are satisfied. First, entity means there is a reasonable assurance. There is a reasonable assurance. Reasonable assurance means chances are more than 50%. Reasonable assurance means chances are more than 50%. There is a reasonable assurance that entity will comply with the condition. Entity will comply with the condition attached to them and the grant will be received. If these two conditions are satisfied, then grant will be recognized. The grant will be recognized on accrual basis also, even though not received. Even though not received. Understood? So once again, what are the two conditions? When there is a reasonable assurance that entity will comply with the condition attached with that and grant will be received, means even though grant will not be received, it can be recognized as government grant. Means what journal entry will do? The journal entry will what? If I say journal entry, in that case journal entry will what? Ki receivable account debit to grant. Receivable account debit to grant. So it means, can I say government grant can be recognized on accrual basis that two conditions are satisfied? If any one of that two conditions is not satisfied, then we need to wait for the actual receive. So if suppose these two conditions are not satisfied, then we recognize grant only when it is received, that is bank account debit to grant. Bank account debit to grant. Understood? So either it can be received or on receivable basis, depending upon the condition, whether that condition has been satisfied or not satisfied. Now what is the objective of this chapter? Objective of this chapter to identify what will be the accounting treatment of this grant. Means this grant, whether it will be transferred to PL or it will not be transferred to PL. So as per AS12, there are two approaches. This can be either transferred to capital reserve or it can be transferred to SOPL. It can be transferred to SOPL. So we need to now understand when it will be transferred to capital reserve, when it will be transferred to PL as an income. Correct? PL as an income. Now in PL also it can be recognized on an immediate basis, means it will be transferred to PL on immediate basis, or it can be treated as deferred income, and deferred income will be transferred to profit and loss account on some systematic basis over the period. That we need to understand what is that systematic basis of amortization of deferred income. This is actually the objective of this particular chapter. Understood? Have you understood whatever I am saying? Bolo. Up to this any doubt? Means what I want to say. First, you have understood what is journal entry. So this government grant can be recognized on received or receivable basis. Received or receivable basis, two conditions has been given. First condition is what? There is a reasonable assurance that the condition attached with the grant will be satisfied, and there is a certainty of collection, means whatever the grant will be received, there is a certainty of collection. If these two conditions satisfied, then recognize the journal entry, pass this journal entry. Now objective of this chapter, what will be the accounting treatment of grant? So as per AS12, this grant may be transferred to capital reserve or may be transferred to PL. Now we need to understand when to transfer to capital reserve and when to transfer to PL. On PL also, it can be transferred either on immediate basis or as a deferred income. Deferred income is it will be amortized over the period on some systematic basis. Now what is that systematic basis that we need to understand? Chalega? Yes sir. So that is only given. What is given? Check karo. Ki accounting approach of government grant, either capital approach. Capital approach means grant will be credited. Grant will be credited directly to other component of equity, that is capital reserve. Or income approach, grant will be credited to PL over one or more years. Means either recognize grant to PL immediately when grant is received or receivable, or grant may be recognized in PL on some systematic basis over the period in which the entity recognize related expenses which the grant are intended to compensate. Means we need to understand what is that basis, and that will depend upon the nature of grant, for which purpose the grant has been received. The accounting treatment is based on that purpose. Have you understood what I am saying? Now first is grant related to depreciable asset. Depreciable asset are those assets which are depreciated, for example property, plant and equipment, but excluding what? Land is not a depreciable asset. Or can you say intangible asset? It will also include intangible asset, because intangible asset are amortized. Amortization and depreciation are same. Amortization and depreciation are interchangeable term. The term used for intangible asset is amortization. The term used for property, plant and equipment is what? Depreciation. Correct. So grant related to depreciable asset, but it will not include inventory, because inventory is not a depreciable asset. Chalega. Yes sir. Excluding land, because land is not a depreciable asset. Chalega. Yes sir. Now whenever grant is related to depreciable asset, so they have given two accounting treatment. Means either you do this or this, your choice. So either the grant whatever has been received can be deducted from the cost price of asset. Very simple. Grant whatever you have received is deducted from the cost price of asset. For example, you purchase one asset of rupees 100 lakh and you receive grant of 20 lakh. So this will be deducted, and what will the cost price of asset? 80 lakh, and this 80 lakh will be depreciated in the useful life of that asset. Or sometime what may be happened that you have purchased one asset of rupees 100 lakh and you have received a grant of rupees 100 lakh, then it will become zero. So in that case, what AS12 says that because you are using the asset and because of that grant, it becomes zero. So for disclosure purpose, disclose this asset at nominal value. Because can I say you are using the asset, so you should inform user that there are some asset you are using, even though the cost price become zero because of the grant. So if the grant is equal to or more than the cost price of asset will be disclosed at nominal value. Nominal value means insignificant value. Insignificant value means only for disclosure purpose, rupees 10, rupees 100, only for disclosure purpose. So when this is the case, then the asset will be disclosed at which value? Nominal value. Understood? Any doubt? Have you understood? The second treatment is what? Grant is treated as deferred income. In this case, the grant will not deducted from the cost price of asset, that will be separately recognized as a deferred income. Deferred income means what? Journal entry will pass bank account debit to deferred income, and that deferred income will be amortized to PL. The deferred income will be amortized to PL over the useful life of asset in the ratio of depreciation. Means you need to find out ratio of depreciation. In that ratio will amortize the deferred income in profit and loss account over the useful life of asset. Means deferred income is recognized in PL over the useful life of asset in the ratio of depreciation. Understood? Have you understood? Correct. Means can I say, in first case, suppose you purchase one asset, so you pass one journal entry, property, plant and equipment, account debit to 100 lakh, to bank 100 lakh. Now you have received grant of 20 lakh. What journal entry will do? In the first case, so you will say bank account directly to PP, deducted from the cost price of asset, and 20 lakh will be this journal entry. So automatically this become 80 lakh. Now the useful life is suppose 10 years. So annual depreciation will be 8 lakh. Means at the end of the year you will pass one journal entry, depreciation account debit to PP, 8 lakh. Second case, the first journal entry will be PP, account debit to bank, PP account debit to bank 100 lakh. Now you have received grant and that is treated deferred income. So what journal entry will do? You will say journal entry, bank account, you have received what? 20 lakh, and that will be treated as deferred income. So we'll call it deferred grant. 20 lakh. Now depreciation will be charged on this amount. So depreciation will be what? 10 lakh divided by 10. So it will be 10 lakh, 100 lakh divided by 10 lakh every year. because it is SLM. So can you say the ratio of depreciation will be same every year, 1:1:2 means 1/10 every year. Therefore, out of this 1/10 will be also transferred to PL and 2 lakh will be transferred to PL. Means what journal entry will do? Point number C means at the end of the year, deferred income will be debited by 2 lakh and that will be transferred as a grant income to PL 2 lakh. This will be transferred to PL. So you can see depreciation is 10 lakh and the grant income is 2 lakh. Automatically the net amount is 8 lakh in SOPL. Means either you use this method or use this method. The expense will be 8 lakh in this case as well as in this case, because in this second case your depreciation 10 lakh but you have credited a grant income to PL account 2 lakh. So 10 lakh minus 2 lakh, automatically it is what? 8 lakh only. Understood this point? Yes sir. Chalega. This you have understood. So grant related to depreciable asset you have understood. Now coming to grant related to non-depreciable asset. Grant related to non-depreciable asset. Non-depreciable asset, only one example I will say: land. Means you have received grant for acquisition of land. You have received grant for acquisition of land. Correct? One example we can say. In that case, what AS 12 says that whenever there is no obligation, where there is no obligation means no condition, you can say. No condition. No condition means it is an unconditional grant. Correct? So if there is no obligation, means there is no condition, the entire amount will be transferred to capital reserve. Means it will not be transferred to PL. In this case, it will be credited to capital reserve. Means whatever grant you have received, that will be transferred to capital reserve. Means what journal entry will do? Bank account debit to capital reserve directly. Bank account debit to capital reserve. But if the obligation exists, means it become conditional. It become conditional grant. Obligation exists means, let me give you one example. Suppose you have received one agriculture land, and what the government says that you can use this agriculture land for your agriculture business, but you need to develop some irrigation facility in the next 5 years. Means you do some development, you need to develop irrigation facility in the next 5 years. Now there is an obligation to develop irrigation facility. Now if you need to fulfill that obligation, you need to incur some expenditure in that 5 years. So what AS 12 says that in this case the grant will be treated as deferred income and will be amortized to PL over the 5 years in the ratio of estimated cost of meeting that obligation. Means of course when you will meet that obligation, when you develop some irrigation facility, you will incur some expenditure. So in the ratio of that expenses, that deferred income will be transferred to PL. That will be amortized to PL. Means that information will be given in the question. However, till now this question has not been asked in exam. Only when the question is silent, so we'll say it is transferred to capital reserve. So normally this question has been asked. This question has not been asked in CA Inter exam. So what they are saying, treated as deferred income and recognized in PL over the period over which the cost of meeting the such obligation is charged to profit and loss account. So they will give the cost. In that ratio, amortize in PL. In that ratio, the deferred income will be transferred to PL. Understood? Have you understood grant related to non-depreciable asset? Grant related to non-depreciable asset, bolo. Any doubt? This also you have understood? Chalega? Yes sir. Now non-monetary government grant means grant receiving kind. In that case they have given two options. Means if the grant whatever you have received is free of cost, grant whatever you have received means non-monetary grant whatever you have received free of cost, then that will be disclosed at nominal value, recorded at nominal value. Or if that has been given at concessional rate, then recorded at concessional price. Let me take one example. Suppose you receive a non-monetary grant of land whose fair value means current value is 100 lakh. 100 lakh. Now there can be two situations. Either you receive grant free, then there is no cost price because you have not paid anything. Then in that case you need to record this grant at nominal value. So you will pass one journal entry, land account debit at 10 rupees or 100 rupees, not lakhs. This is 10 rupees, 100 rupees. Correct? Two, you can credit any account because this journal entry has been done only for disclosure purpose. Can you say 10 rupees, 100 rupees will pass any journal entry, it will not affect your financial statement. So you can add on you can add on PL account, you can add on journalism of your choice. This journal entry will not affect your financial statement. This is only for disclosure purpose. Correct? So land will increase by rupees 10 or rupees 100 only for disclosure purpose. But if it is concessional amount, for example 100 lakh land was given at 10 lakh, so you have paid 10 lakh, then your journal entry will be land account debit to bank 10 lakh, and it will be recorded at concessional rate. It will be recorded at concessional rate. Very easy. Chalega. But you can see in this case we are not recognizing grant. Grant is not recognized. Grant is not recognized. So either recognize it free, if receive at free, then recognize at nominal value. If receive at concessional rate, recognize at concessional value. Chalega? Yes sir. This also you have understood. Then point number D, grant related to income. When I say grant related to income, means you have received some grant for revenue expenses. You have received some grant for revenue expenses. Revenue expenses are those expenses which are charged to profit and loss account. For example, let me take one example. Suppose you want to set up an industry, and for that industry you require some trained employee from Japan for 2 years. Now Japan employee, the cost will be very high. Therefore, you have approached the government, and government has given the grant to incur that salary expense of technical employee. For how many years? 2 years. Understood? So that become grant related to revenue expenses. In that case, very simple, that it will be treated as deferred income. Means once received, it will be treated as deferred income, and it will be amortized in PL. It will be recognized in PL on systematic basis over the period necessary to match with the related expenses which they are intended to compensate, which the grant are intended to compensate. Means suppose you have received a grant of 10 lakh, and year 1 and year 2 the salary will be 2 lakh 8 lakh. So in the first year, out of 10 lakh, how much will be transferred to PL? 2 lakh. In the second year, how much will be transferred to PL? 8 lakh. Simple. Means it will be transferred to PL over the period necessary to match the related expenses which they are intended to compensate. Means as per matching concept. As per matching concept. Got this point? Let me take one question based on this. Let me take one question. You can see. Question 4. X company run a charitable hospital. It incur a salary of doctor, staff, etc. to the extent of 30 lakh per annum. As a support, the local government grant a lump sum payment of 90 lakh to meet the salary expense for a period of next 5 years. You are required to pass the necessary journal entry in the books of company for the first year if the grant. So what is journal entry? Now there are two ways. Either the grant can be recognized as a separate income, or the grant can be also deducted from the respective expenses. Means there are two methods of presenting in SOPL. So they have seen either shown as a separately as other income. If the case number 1, then what journal entry? First journal entry, bank account debit to deferred income 90 lakh 90 lakh. Then what is your salary expense? Salary expense of 30 lakh will be incurred. So salary expense account debit to bank, salary expense account debit to bank. Now out of this deferred income, how much will be transferred to PL? 90 lakh, 30 lakh will be transferred to PL. So what journal entry will do? Deferred income account debit to grant income. Deferred income account debit to grant income or other income, whatever you are saying. 18 lakh. Understood? Correct? Understood what I am saying? So they have done 90 divided. So they have what they have said, as a support the local government grant a lump sum payment, right, 90 lakh to make the salary expense for a period of next 5 years. Next 5 years. So can I say next 5 years means 90 divided by 5. How much? 18 lakh will be transferred to what? PL account. Understood? Because they have not given the salary of each year. So you will assume that this will be allocated equally over 5 years. This will be allocated equally over 5 years. Understood? Very simple. And you can see in your SOPL, this will be shown, means when you prepare SOPL. So in other income, what you write down? 18 lakh. And salary expense will be written what? 30 lakh. This will be the presentation. But sometimes this can be also shown as a deduction against salary cost. Then what will be journal entry? First journal entry will be bank account debit to deferred income. Then second journal entry was salary expense account debit to bank. Salary expense account debit to bank. You can pass the net journal entry. Net journal entry is 30 minus 18, 12 lakh. Or you can pass two journal entry. Salary expense account debit to bank. Means from my point of view, this is the not correct journal entry. This is 30 lakh only. Why they have done 12 lakh? This will be 30 lakh. I think wrong. Salary expense account debit to bank, because they have paid 30 lakh. Now, can you say out of this deferred income, how much will be adjusted to this salary expense? That is 18 lakh will be adjusted. So deferred income to salary expense will be 18 lakh. So 30 lakh minus 18 lakh will become 12 lakh. This is not correct. Correct it now. The second journal entry will be 30 lakh. Means in this case, what you will do, when you will prepare your SOPL, so other income will not come. Directly salary expense will be net of what? Net of with that grant income. So 30 minus 18, so 12 lakh will come. 12 lakh will come. This is the presentation. Understood this point? This question can be asked in exam. This question can be asked in exam. I hope you have understood. Correct? So that is only given. Presentation in SOPL. Presentation in SOPL. What they are saying? How to present in SOPL? 1 minute. How to present in SOPL? Presented in SOPL either as a separate income or under other income, or presented by way of deduction from related expenses. But this presentation is only for this type of grant which are related to income. This presentation is not applicable to grant which are related for depreciable asset or non-depreciable asset. So this presentation is only for this. Correct? Now, point number E, what they are saying, government grant in the nature of promoter contribution. So there are sometimes government grant which are received which are in the nature of promoter contribution. What do you mean promoter? The promoter are the person who promote any industry. So sometimes government act like a promoter when they want to develop industry in a backward area, or they want to promote a specific type of industry, for example export industry, etc. In that case, can I say normally government will give grant to promote that particular industry. In that case, what AS 12 says, that entire grant income whatever received will be transferred to capital reserve, will never be transferred to PL account, and such grant will not be available for distribution of dividend, and therefore transferred to capital reserve. Understood? So credited to capital reserve means journal entry is bank account debit to capital reserve, and such reserve can neither be distributed as dividend nor considered as deferred income, means that will not be available for distribution of dividend. Correct? Means you can see whatever we have done till now, either the grant was transferred to capital reserve or grant was treated as deferred income and recognized in PL over a systematic basis over the number of period. But there are two cases where the grant will be transferred to PL immediately without deferring that. Means that will be transferred to PL as and when the grant is received or receivable. So there are two exceptions. In the following cases, grants will be recognized in SOPL of the period in which it is received or receivable. In which it is received or receivable. There are two cases. First, government grant is received or receivable to compensate past expenses or losses. Means if you have received the grant to compensate past losses or past expenses, then in the year when the grant is received, it will be transferred to PL. Or sometime grant received or receivable as a reward for the purpose of giving immediate financial support with no related cost. With no related cost means without any condition. So sometimes government act as a financer to promote a company, to I will say save a company which are a sick company. Sick company means Bimar company. You have done internal reconstruction. So in that case, government give grant as a reward for the purpose of giving immediate financial support to that entity without any related cost, means without any condition. In that case also, entire grant will be transferred to PL immediately, and that cannot be deferred. Chalega? Understood? So this may be also important from examination point of view, कि when the grant will be transferred to PL as and when it is received or receivable, only these two cases it will be transferred to PL as and when it is received or receivable. Coming last point of this chapter, refund of government grant.
Okay. I found this on the web for
refund of government grant. So can I say whenever the condition is not satisfied, the grant will be available for refund? Grant will be available for refund. So government grant become refundable because of non-fulfillment of condition attached to them. And what AS 12 says that whenever there is a refund, the refund of government grant will be treated as an extraordinary item. You know that as per AS 5, extraordinary item requires special disclosure under SOPL. Special disclosure under SOPL, correct? So a government grant that become refundable is treated as an extraordinary item as per AS 5. Important for MCQs, important for MCQs. Chalega. Now what is the accounting treatment of refund of grant? It is very easy. It is very easy. What AS 12 says that just see what you have done initial journal entry. If it is initially credited to capital reserve, so now it will be debited to capital reserve. If initially credited to PL, so now debited to PL. If initially credited to asset account, now debited to asset account. If initially credited to deferred income, now debited to deferred, now deferred income account. So accounting is very easy. Accounting is very easy. So what they are saying, if the grant is initially transferred to capital reserve, credited to capital reserve, then what is the refund journal entry? Capital reserve account debit to GG payable and then GG payable to cash or bank. Chalega? Understood? If the initially the grant was credited to asset, only one situation when we have done that, the grant will be deducted from the cost price of asset. In that case, what journal entry? Asset account debit to GG payable and then GG payable account debit to cash or bank. Simple. And if the GG is treated as deferred income, correct? In this case, thoda sa I need to explain, correct? Means just try to understand. Suppose you have received a grant of 100 lakh and this become deferred income. Now out of these amortized to PL means transfer to PL. Already you have transferred 40 lakh to PL. So how much unamortized? Unamortized 60 lakh. Means can I say this unamortized portion will remain as deferred income in the balance sheet? Means that will be deferred grant in the balance sheet in the liability side, correct? In the liability side. Now suppose out of 100 lakh, 90 lakh become refundable. Then what they are saying? First you will debit deferred income account. Means first journal entry will be deferred income account will be debited with 60 lakh and balance will be debited to PL account. PL account will be 30 lakh and then bank. Bank means GG payable and then GG payable to bank. This is the journal entry. Means first debit unamortized grant, then debit whatever has, then debit PL account, then debit PL account. This they want to say ki deferred GG account, then PL account to GG payable to cash or bank. This I have explained from examination point of view. However, actually this is the case. Means now you can understand this. Ki relating to revenue, so it has been transferred, it has been treated as deferred income. So in this apply first again unamortized deferred income and charge balance to PL. Now you will be able to understand. Relating to promoter contribution, then it has been credited to capital reserve. So deduct from capital reserve means capital reserve account debit to bank. Relating to specific asset, depreciable asset, non-depreciable asset. So non-depreciable asset, can I say it has been transferred to capital reserve? So deduct from capital reserve. Depreciable asset, alternative 1. Apply first against unamortized deferred government grant and charge balance in PL account. Alternative 2. Increase the book value asset means asset account debit to GG payable. And can I say because of this journal entry, the carrying amount will be revised. So what they want to say, revised carrying amount will be depreciated during the remaining useful life of the asset. Simple point, means next year the depreciation is going to change. That only they have mentioned. Depreciate the revised book value of asset prospectively over the remaining useful life of the asset. Means I will say the crux of this discussion is this particular point. Just see where it was initially credited, now debit that account. That is the crux of this particular concept. Understood? Disclosure requirement is very easy, you read by your own. So this chapter is also completed. Let us do the balance question. Have you understood this point? Have you understood this point? Got this point? Let us do the balance question. So one question already we have done. Come to question number 6. How would you treat the following in the account in accordance with AS12 government grant? Rupees 35 received from local authority for providing medical facility to the employee. Medical facility to employee. So can I say this is for medical expenses? So this will be recognized as a deferred income and will be amortized to PL on systematic basis over the period necessary to match the related expenses which they are intended to compensate. This is the particular point. So such grants are generally presented as a credit in PL account either separately or under general heading as other income. Alternatively, 35 lakh may be deducted in reporting related expense, that is the employee benefit expense. That is only I have said. Chalega. 100 lakh receive a subsidy from central government for setting up a unit notified backward area. The subsidy is in the nature of promoter contribution. Can I say it will be transferred and credited to capital reserve? So whenever government grant in the nature of promoter contribution, correct? So you should only write down this. The subsidy received from central government, correct, will be transferred to capital reserve. Only this is the answer. You are not supposed to write down this much in exam. Write down it will be credited to capital reserve and it will not be available for distribution of dividend to shareholders. Rupees 10 lakh grant received from the central government on installation of anti-pollution equipment. So there are two approaches. Both write down. Either it can be two methods. Either it can be deducted from the cost price of asset or it can be treated deferred income. The deferred income will be amortized to PL over the useful life of asset in the ratio of depreciation. Only that much is required. Chalega? Yes, sir. Next point. White Limited, a fixed asset is purchased for rupees 25 lakh. Government grant received is 10 lakh. Residual value is 5 lakh. Useful life is 5 years. Assume depreciation on the basis straight line method. Asset is shown in the balance sheet net of grant. Net of grant means what? Means we have the entire grant received will be deducted from the cost price of asset. After 1 year, the grant become refundable to the extent of 6 lakh due to non-compliance with certain condition past journal entry in both the year. The first year, first journal entry what? We have purchased the PP account debit to bank 25 lakh. Then you have received grant of rupees how much? 10 lakh, that is deducted from asset. So you can see bank account debit to PP 10 lakh. So net amount become 15 lakh. This 15 lakh will be depreciated in how many years? 5 years. The residual value is 5. So you will do 15 minus 5 divided by 5 means 2 lakh is the depreciation. So first year depreciation account debit to PP 2 lakh and the depreciation will be transferred to PL account. Now what they are saying? After 1 year the grant become refundable. So can I say after 1 year grant become refundable and refundable to the extent of 6 lakh means refundable amount is 6 lakh. You have received 10 lakh but you refund only 6 lakh. So can I say the 6 lakh whatever you are refunding will be debited to asset account. So what journal entry will do? PP account debit to asset, PP account debit to bank 6 lakh, or you can see PP account debit GG payable, then GG payable to bank. You can pass that journal entry also 6 lakh. Now your revised carrying amount will become how much? Check karo. 15. It was initially 50 minus 2 13, then plus 6. Now it become 19. Now remaining useful life is 4 divided by 4. So 19 divided by 4. What is depreciation? Sorry, 19 minus 5. My mistake. 19 minus 5 divided by 4. It is what? 3.5. So 3.5 is the depreciation. So you can see they have again one more journal entry, depreciation account debit to PP 3.5. This is important. Can be asked in exam. This type of question normally they ask in exam. Understood? This you have understood? Any doubt? No doubt. One more question will take. Question 9. On 1/4/2001, ABC Limited received government grant of 300 lakhs for acquisition of machinery costing rupees 1500 lakh. So this is also grant related to depreciable asset. The grant was credited to the cost price of asset. Same thing, it is deducted from the cost price of asset. The life of machinery is 5 years. The machinery depreciated at 20% on WD basis. The company had to refund the grant in May 2004 due to non-fulfillment of certain conditions. How do you deal with the refund of the grant? So you can see the company has to refund a grant in May 2004. May 2004, correct? The first year, can I say 2001, 2, 3, 4. So 3-year depreciation will charge on normal basis. So it was initially purchased at rupees 1500 lakh. From this 300 lakh deducted, so the net value become 1200. Means acquisition cost is 1200, directly we deducted 300 from that. Now depreciation of first, second, third, it is on which basis? On WD basis. WD basis. So first year 20%, then again 20%, then again 20%. So this become the book value. This become the book value at the end of third year. Now the refund happened in the fourth year. How much refund? The entire amount was refundable. So we have added 300. So now it become 914.40. 914. This become the revised carrying amount. And again this revised carrying amount will be depreciated during the remaining useful life. The rate of depreciation 20% they have given. So you can find out 914 into 20%. So for the next year the depreciation will be what? How much? 914 into 20% will be equal to how much? 182. It is given, not, they have not calculated, but they have just given one para. What is the para they have given? Ki depreciation of 20% on the revised book value amounting to rupees 914.40 is to be provided prospectively over the residual useful life, remaining useful life of the asset. Correct na? That they have given. Understood? Bolo. Simple. Have you understood this point? Chalo. Now one more question. Company X run a charitable hospital. It incurs salary of this to already I have done. But chalo. Salary of doctor staff to the extent of 30 lakh per annum. As a support, the local government grant a lump sum of 90 lakh to meet the salary expense for a period of 5 years. As at the start of year 4, company X is unable to meet the condition attached to grant and is required to refund the grant of 90 lakh. It means just try to understand how much grant received is 90 lakh, correct? And can you say at the start of year 4 means 3 years you have already amortized it. So how much you have amortized? So you have already amortized for 3 years. So 90 into 3 divide by 5. So okay, 54 lakh you have already amortized. So how much you have not amortized? Minus 90. So 36 you have not amortized. Means can I say 54 lakh is already transferred to PL. How much you have transferred to PL? Into 90 into 3 by 5 you will do. This much you have transferred to PL. And how much you have not transferred to PL? 90 into 2 by 5 is not transferred to PL. So 36 was deferred income and 54 has been transferred to PL. What journal entry? Deferred income 36. PL account debit 54. To bank what 90 lakh. This journal entry you will do. Got this point? Have you understood? Chalega? Correct. This 21 is also good question what they have said. D Limited acquired a machine on 1/4/2017 for rupees 20 lakh. So on 1/4/2017 they have acquired one machine. The useful life is 5 years. The company has applied on 1/4/2017 for its subsidiary to the tune of 80% of cost. Means they have applied for a subsidy for a 80% of cost. The sanction letter for the subsidy was received in November 2020. Means they have received subsidy in the November 2020. The company fixed asset account for the financial year 2021 shows a credit balance as under. Means original cost was 20 lakh and you can see they have charged depreciation for 2 years. So what they have done, 20 divided by 5 into 2. So 20 divided by 5 into 2, it is coming. The useful life is 5 years na. So how many years? It is 3 years, sorry. It is 17-18, 18-19 and 19-20, 3 years. So 3 year depreciation will charge, so that will become 12 lakh. Means what you have done, 20 into 3 divided by 5. So that will be 12 lakh. So this become what? This become what? 8 lakh. And now refund has been done. Means sorry, the grant has been received. Grant has been received. So how much grant has been received? That is 80% of cost. 80% of cost means 20 lakh. 16 lakh grant has been received. So they have deducted from the WDB and there is a surplus balance with credit balance in PV. This is not correct. So what is the correct accounting treatment? Ki to the extent of 8 lakh, it is deducted from the cost price of or WDB of the asset, and balance 8 lakh will be transferred to profit and loss account. So that they have given. Ki you can see ki out of 16 lakh, 8 lakhs to be credited to machine account, and the balance 8 lakh may be credited to PL, since already the cost of the asset to the tune of 2 lakh has been debited to PL. Understood? Means what journal entry you should do at this particular question? You receive how much? 16 lakh. To asset how much? 8 lakh. And to the grant income transfer to PL will be 8 lakh. This journal entry you will do. Understood? And the balance will become 0. The balance will become 0. However, it can be disclosed at nominal value. Because the balance has become 0, so you should write down because the balance has become 0, the WDB of machine will be disclosed at nominal value. Understood? One more point, question number 8. Suppose you are using deferred income wala accounting treatment. So I am just explaining. Suppose you are treating it as a deferred income. So can you see the first journal entry what? Property, plant and equipment, account debit to bank 25 lakh, 25 lakh. Second journal entry what? Bank account debit to deferred income, and deferred income will be how much? It is 10 lakh. Now third year depreciation, account debit to PP, that is 25. What is the residual value they have given? 5. So 25 minus 5 divided by 5. So it is 4 lakh. Depreciation of 4 lakh. And can you say this will be also transferred to also deferred income, account debit to grant, and that is transferred to PL. How much? 10 divided by 5 only. So 10 divided by 5 will be 2. That is 2 lakh. So you can see ultimately net expense is 2 lakh only. This journal entry you will do in the first year. Now what happened in the second year? Refund happened. In the second year refund happened. So out of this deferred income, what is the unamortized grant? Unamortized is 10 minus 2, 8, and how much has been transferred to PL? That is 2. Now what is the refund? Refund was how much? In this refund was only 6. In this refund was only 6. So what journal entry you will do? Badao. In the next year, year 2, deferred income 8, to bank 6, and the difference, can you see that difference become again, and this will be also transferred to PL. That will be because refund happened, but unamortized portion is 8. Refund is only 6. Refund is only 6. So this will be transferred to PL. 2 lakh will be your income, and that will be transferred to PL. A special point therefore I have discussed. Understood this point? Now depreciation of this will be on which amount? So depreciation of this will be 20, means out of 20, the carrying amount is what? 25 minus 4. Correct? So this 21 is the carrying amount, means minus 5 is the residual value. So that is how much? 21 minus 5, 16, and this 16 will be depreciated for how many years? 4 years. So 16 divided 4. So you can see your depreciation remain unchanged. In this case depreciation remain unchanged, because in this case the revised carrying amount will not change because of this particular journal entry. So this is also one special point that also I have discussed. Understood? Have you understood this entire point? So we have completed 2 accounting standards. You will get all the notes. You will get all the notes from where? From our Telegram channel. The link of the Telegram channel is given in the link of the Telegram channel has been given where? In the description of this video. Just join our Telegram channel. AS Saaransh book. You will receive the PDF. Expected question. You will receive the PDF, and the test series is going to come. That also you receive PDF there. Understood? So everything you will get there. So we have completed 2 accounting standards. Now we'll take a break. We'll take a break. Correct now. And we'll meet after 45 minutes. We'll meet after 45 minutes. So your break will be for how many minutes? 45 minutes. Understood? Chalega. So Adam, break. 45 minutes. We'll meet at 3 p.m. Class will resume at. In that after break we'll do AS 26 and AS 16. This is our target. चलेगा. Hello, hello. Now, everyone, can we start once again, everyone? So before break, we completed two important accounting standard, that is AS10 and AS12. I hope you have understood. Now, after break, we'll start two more important accounting standard, that is AS26 and AS16. Okay, sir. Can we start? Let us start AS26, intangible asset. Now, intangible asset will not take much time because it is somehow related to AS10 only. Because if you have done AS16, if you have done AS10, then it will not take much time in AS26. But we need to understand what is the meaning of intangible asset. So, what is the meaning of intangible asset? Intangible asset are asset. Of course, it is an asset. So, intangible asset are asset which are identifiable non-monetary item without physical substance. So, there are three characteristics of a intangible asset. It must be identifiable, it must be non-monetary item, it must be without physical substance, and of course it is held for use in the production of goods or supply of goods or services, correct, for rental to other or for admin purpose. Okay, this is common as we have done for property, plant and equipment. Same point has been given. So can you repeat the definition with me? The intangible asset are the asset which are identifiable non-monetary item without physical substance and which are held for use in production of goods or for supply of goods or services or for rental to other or for admin purposes. Now, can you say we need to understand what is the meaning of identifiable, what is the meaning of non-monetary item, and what is the meaning of without physical substance? Can you say if you understand these three meaning, we understood the meaning of intangible asset. But can you say before that, we need to also understand what is the meaning of asset. However, asset, asset means any resource which is controlled by entity as a result of past event. So, any resource which is controlled by the entity as a result of past event and which provide future economic benefit to the entity, means which are from which future economic benefit are expected to flow to the entity, then it become an asset. So any resource which are under the control of the entity as a result of past activity and from which future economic benefit are expected to flow to the entity. If these two conditions are satisfied, so any resource will become an asset. So what are the two conditions? Can is control and future economic benefit. What do you mean by control? Control means that entity has a power to obtain the future economic benefit flowing from the underlying resource, means the entity can derive the future economic benefit from that particular asset and also can restrict the access of other to those benefit. Means if I can use the asset and I can restrict the other person of using that asset for using that asset, it means it is my asset, it is my under my control. So that is the meaning of asset. I hope you have understood. Now coming to identifiable. So what do you mean by identifiable? So what AS26 says that an asset is identifiable if any one of the following condition is satisfied. They have given how many condition? Two condition. If one condition is satisfied, it will become an identifiable asset. So first, the asset is separable. Asset is separable. So what do you mean by separable? Separable means it is capable of being separately sold or transferred or licensed or exchanged or rented. Means if it is separable, means it is capable of being sold separately, capable of being exchanged separately, capable of being transferred separately, capable of being given on rent separately. So if it is capable of being sold, etc., it means it is separable from the entity. For example, just try to understand, suppose I have a building and if it is capable of being sold separately, if I can sell it separately without any other asset, it means it is an identifiable asset. If it means it is an identifiable asset. So any asset will become identifiable if it is separable. If it is separable. Second, the asset arises from any contractual legal right, even though it is not transferable. So if any asset arises from contractual or any other legal right, even if these rights are non-transferable, then also that asset become what? Identifiable. For example, suppose you purchase a license. You purchase a license with a restriction that it cannot be transferred. License, suppose you purchase license to run a cinema hall, correct? And as per the contractual agreement, it is non-transferable. Then also can I say the whatever asset that is arising from a contractual right, even though it is non-transferable, it become an identifiable asset. Got this point? So what do you mean by identifiable asset? Must be separable. It must be arises from contractual or any other legal right. These are the keyword, correct? Now what do you mean by non-monetary item? First, for that we need to first understand what do you mean by monetary item, monetary asset. So in simple word I will say monetary asset are those receivable which are realizable in cash, means which can be realized in cash with a certain fixed determinable value, then it become what? Monetary asset. So in simple word, all the receivable which can be realized in cash, only cash. When I am saying cash means currency which can be realized in Indian currency or foreign currency, that become monetary asset. Understood? So monetary asset are those assets which are money held, and which are received in the fixed or determinable amount of currency. Fixed or determinable amount of currency means money. Understood? That become monetary item. So those assets which are not monetary asset, that become non-monetary asset. Examples of non-monetary asset are property, plant and equipment, intangible asset, inventory, etc., etc., etc. However, detailed discussion about monetary and non-monetary item will do in accounting standard 11. But for the time being, you have understood what is non-monetary asset. So non-monetary asset are those assets which are not realizable in cash. Means I should not say it is not realizable in cash, means it is not money held. It is not money held. Abhi right now it has not been sold. So can I say if it is sold, then of course we will receive cash. So right now it is not held in money form. Right now it is not held in money form. That become non-monetary asset. Chalega. So intangible asset are non-monetary asset. Third, characteristics are without physical substance. Can I say every intangible asset or most of the intangible asset will be stored in some storage device, and the storage device will be some tangible component. For example, if you purchase any software, Tally software, any other software, that will come in a compact disc or in a pen drive, etc. Correct? Suppose if you have written a formula, the formula will be written in a piece of paper. So intangible asset is normally stored in a storage device, and a storage device will have some tangible component. So what AS26 says that the cost of that tangible component is insignificant in relation to the cost of intangible component. Therefore in that asset will apply AS26. So what they are saying, intangible assets are stored in a storage device which are tangible, but the cost of tangible component is insignificant as compared to the cost of intangible component. Therefore entire asset will be an intangible asset and apply AS26. But Sometimes what happens, the cost of tangible component as well as intangible component both can be significant. Then what we'll do, for example, you purchase a laptop with an operating system, so both are significant. Both are significant. In that case, what AS26 says that if both tangible component and intangible component are significant, and the intangible component is an integral part of tangible component, and the intangible component is an integral part of related tangible component. So what do you mean by integral part? Integral part means that intangible component cannot be used without tangible component. For example, if you say our bones are the integral part of body, can you say bone? The bones without body cannot be used. That is the integral part. Lungs is the integral part. Correct now. So that cannot be separated. That cannot be separated. So whenever intangible component is the integral part of a tangible component, means without that intangible component, the tangible component cannot be used. In that case we need to apply AS10 only, means there is no need to separate, apply AS10 to the entire component. So entire asset will be treated as property, plant and equipment and apply AS10. But if the intangible component can be separated, means is not an integral part of tangible component. So if intangible component is not an integral part of related tangible component, then intangible component will be treated as intangible asset and tangible component will be treated as property, plant and equipment, and apply respective accounting standard. Means for intangible asset apply AS26, for tangible asset means property, plant and equipment apply AS10 in this case. Understood this point? Have you understood the point? This become the meaning. Now let us come to recognition criteria. Once we have understood that, once the definition criteria is satisfied, we need to apply the recognition criteria. So once again, there are two conditions. If that two conditions are satisfied, then the cost price of an intangible asset can be recognized as an asset. So what they are saying, intangible assets should be recognized if and only if the following conditions are satisfied. First, it is probable that future economic benefit that are attributable to the asset will flow to the entity and the cost can be measured reliably. Normally in case of intangible asset, it is quite possible the second condition is not satisfied, because sometimes what happens for intangible asset, the cost cannot be measured reliably. In that case, intangible asset will not be recognized in our books of account. For example, the best example for it is the self-generated goodwill. Normally what happens, goodwill we have, suppose I am doing we are doing business from last 15 years, so we have a goodwill, we have the goodwill and goodwill has a value, but what is the cost incurred to generate goodwill, that cannot be measured reliably. Means we have incurred a lot of cost, but we cannot directly attribute such cost in the generation of goodwill. Therefore entire cost will be charged to profit on its account and nothing will be capitalized as an intangible asset. Understood? Yes sir. Now coming to initial measurement of intangible asset, it is more or less similar to what AS10, so we will not take much time on this. An intangible asset should be measured initially at cost. Correct. So separate acquisition, if you acquired intangible asset in a separate transaction, separately acquired, then what is the cost price? Cost price will include invoice price less trade discount or rebate plus non-refundable duties and taxes. Case this become other non-refundable duties and taxes, this become purchase price. In this we'll add all the directly attributable cost for bringing the asset to its usable condition. For example, registration fee, borrowing cost as per AS16 coming soon, professional fee for the legal services, correct now, or any brokerage cost will be added, any borrowing cost subject to AS16 and less government grant subject to AS12 we have done before break. So government grant will be deducted if we have treated government grant as a deduction from the cost price of asset. This will be the cost price of acquired intangible asset. Understood? Simple. Now acquired in exchange of non-monetary asset, it is as simple as whatever we have done for AS10. So cost price of intangible asset acquired will be equal to fair value of asset given up plus minus cash adjustment plus fair value of asset received, or if the fair value cannot be measured reliably, then it will be carrying amount of asset given up plus minus cash adjustment. Same thing we have done, fair value of asset given up plus minus cash adjustment of fair value of asset received or acquired whichever is clearly evident. However, if the fair value asset cannot be measured reliably or the exchange transaction lacks commercial substance, then in that case the cost price of intangible asset acquired will be equal to carrying amount of asset given up plus minus cash adjustment. Means same to same, whatever we have done for property plant and equipment, same thing will apply. However, carrying amount means the net book value. Net book value means after depreciation. Understood? Yes sir. Now acquired in exchange for shares or other securities. This point was not given in AS10. Means if you acquired PP in exchange of shares, the AS10 is silent regarding that. AS10 is totally silent regarding that, but AS26 says that in that case cost price of intangible asset acquired will be equal to fair value of asset received or fair value of securities issued whichever is clearly evident. So fair value of asset received or fair value of security issued whichever is clearly evident. In this case the first preference will be given to this and second preference will be given to this if both are given in the question, correct? But till now this type of question has not been asked in ICI exam question. So acquired in exchange of shares, for example the journal entry will what? Intangible asset account debit to equity share capital. Means you acquired intangible asset in exchange of your own securities, means you have issued equity shares. In that case this journal entry will be done. The first preference will be fair value of intangible asset acquired, fair value of asset received. If that fair value is not known, then do this journal entry with the fair value of equity shares issued. Understood? Correct? Yes sir. Now acquisition as a part of amalgamation, can I say this will be automatically covered in AS14? So this will be automatically covered in AS14. Correct? Now they will automatically do it, but you know that in the amalgamation chapter, if the amalgamation in the nature of purchase, then we calculate goodwill as a difference between purchase consideration and fair value of net asset acquired. Fair value of net asset acquired means what formula we have done? Keep purchase consideration less fair value of net asset acquired. This will be goodwill. This will be goodwill. This we have done in AS14. Of course AS14 will do as a separate revision class. Now this net asset, can I say, include some other intangible asset apart from goodwill? So what AS26 want to say that this other intangible asset apart from goodwill will be recognized at fair value on the date of acquisition. This other intangible asset apart from goodwill will be recognized at fair value on the date of acquisition. So an intangible asset acquired in an amalgamation in the nature of purchase is accounted for in accordance with AS14. Correct? Now acquired through government grant means if you acquired any intangible asset through government grant, that we have also done in AS12. If it is acquired free of cost, then record at nominal value. If it is acquired at concessional rate, then record at concessional value. So acquired at concessional rate, recognize that concessional value. Acquired at free of charge, recognize at nominal value. This also we have done under AS12. AS12 chalega. Now internally generated goodwill, right now I have said that if there are some self-generated goodwill, the cost cannot be measured reliably. Therefore what AS26 that says that any self-generated goodwill or internally generated goodwill cannot be recognized as an intangible asset in our books of account. Correct? So internally generated goodwill is not recognized as an asset because it is not an identifiable resource controlled by the entity that can be measured reliably at cost. In simple word, I will say cost cannot be measured reliably. Cost cannot be measured reliably. Correct? But there are many internally generated intangible assets for which cost can be measured reliably. Correct? Now for example, can you say we can develop our own software, cost can be measured reliably. We can develop our own website, that is also an internally generated website for which cost can be measured reliably. We can develop our own know-how to produce. So know how to produce, can I say cost can be measured reliably. So what AS26 says that if the cost can be measured reliably for the internally generated intangible asset, then it can be recognized as an intangible asset. But to recognize an intangible asset, the entire phase of expenditure is divided in two phases. First is known as research phase and development phase. Means whenever you develop your own intangible asset, there are two phases of expenditure. One is known as research phase, one is known as development phase. Any expenditure incurred during research phase any expenditure incurred during research phase will be always charged to profit and loss account as an expense immediately. Means any expenditure incurred during research phase will be charged to profit and loss account as an expense immediately. Why? Because during research phase no intangible asset is created. During research phase no intangible asset is created. But under development phase, when we started developing intangible asset, in that case the expenditure incurred during development phase can be capitalized as an intangible asset. I will say may be capitalized as an intangible asset if entity can demonstrate 6 conditions. Means they have given 6 more conditions. If they can demonstrate that 6 conditions, then the expenditure during development phase can be capitalized. So you will say it may, I am saying may be capitalized, not always, may be capitalized, may be capitalized. Understood? Correct. Now one clarification has been given that suppose an expenditure has been incurred and the entity are not able to identify whether that expenditure relate to research phase or development phase, then always it will be assumed that that expenditure belong to research phase and it will be charged to profit and loss account as an expense immediately. So enterprise treat that expenditure as if it were incurred in the research phase only. Got this point? So treatment of expenditure during research phase recognized as an expense when it is incurred. Treatment of expenditure during development phase recognized as an intangible asset if and only if entity can demonstrate all of the following. Correct. What are the 6 conditions? Out of these 6, 5 condition is for future economic benefit and the last condition is for the cost. Means the recognition condition remain that too only, means there must be probable future economic benefit flowing to the entity and cost can be measured reliably. But in this case, whenever we develop our own intangible asset, so what I asked 26 that we need to demonstrate the future economic benefit, whether there is a probable future economic benefit or not. So how to demonstrate? For that they have given how many conditions? 5 conditions. One is for what? Cost. The 5 conditions are what? That there must be technical feasibility of completing the intangible asset. Means there must be technical feasibility. If there is no technical feasibility, then no, even though you started development but there is no future economic benefit, charged it to profit and loss account. There must be intention to complete the intangible asset. There must be ability to use or sell intangible asset. There must be existence of market. There must be availability of adequate technical or financial resource for completing that intangible asset. These all conditions will demonstrate the availability, probability of future economic benefit. Understood? Can you repeat with me? There must be technical feasibility of completing the intangible asset. There must be intention to complete the intangible asset. There must be ability to use or sell intangible asset. There must be existence of market for the output produced by intangible asset or for the intangible asset itself. And there must be availability of adequate technical or financial resources or any other resources. Last, its ability to measure the expenditure reliably, means cost can be measured reliably. If all these 6 conditions exist, then any expenditure during development phase can be capitalized. Understood? Have you understood this point? Yes sir, correct. Means just try to understand what they want to say. Ki if suppose this is what your research phase. Now can I say research phase can be successful or it can be unsuccessful? Correct. In both cases this research phase expenditure will be charged to profit and loss account as an expense. Means even though research phase is unsuccessful, then it will be charged to PL as an expense. If it is successful, then also it will be charged to profit and loss account as an expense. Now if it is successful, can you say you will start development phase? This is the development phase. Correct. But quite possible that 6 condition is satisfied at this point of time. 6 condition has been satisfied at this point of time, and before that 6 condition, 20 lakh expenditure was incurred during development phase and this 30 lakh was incurred after the satisfaction of recognition criteria. Understood? So this will be charged to profit and loss account as an expense. You can't capitalize this 20 lakh once the condition has been satisfied. Means once charged to PL, it cannot be reversed and cannot be treated as an intangible asset, and this will be capitalized. Understood? Have you understood? Correct. This is very important question from examination point of view. Same question can be asked in MCQ format also. Got this point? Yes sir. So what they want to say, the cost of an internally generated intangible asset is the sum of expenditure incurred from the time when the intangible asset first meet the recognition criteria. First meet the recognition criteria means when all the six conditions cumulatively has been satisfied. Understood? Have you understood this point? Bolo. Have you understood this point? Any doubt? No doubt. Now coming to recognition of an expense means, can I say any any intangible item, if it does not meet the definition criteria or it does not satisfy recognition criteria, then it will not be capitalized as an intangible asset. Then the cost of that intangible item should be recognized as an expense immediately. So what AS26 want to say, that expenditure on an intangible item should be recognized as an expense if it does not meet the definition or recognition criteria or both. So any item, intangible item, if they do not meet the definition or recognition criteria, that expenditure will be charged to PL as an expense immediately. Example of such expenditure are expenditure in startup activities. For example, preliminary expense. So any preliminary expense will not meet the definition of intangible asset because these are not identifiable, it is not capable of being sold separately, etc. It is not identifiable, will be charged to profit and loss account as an expense immediately. Expenditure to open a new facility or business, for example, pre-opening cost. So any expenditure to open a new facility or business, any pre-opening cost will be charged to PL as an expense. Expenditure for commencing new operation or launching new product or process. Expenditure for commencing new operation, starting new operation or launching new product. Launching new product means inauguration expenses, etc. Correct now? That is known as pre-operating cost, will be also charged to PL as an expense because it will not meet the definition of intangible asset. Expenditure on training activity means you have incurred some staff training expenses, that will be also charged to PL as an expense. Expenditure on advertisement and promotional activity, use advertisement expenditure cannot be deferred now, it will be charged to PL as an expense immediately because it will not meet the definition of intangible asset. Expenditure on relocating or reorganizing part or all of an entity means any relocation cost, any reorganization cost will not meet the definition of intangible asset, charged to PL as an expense. So these are the examples which will be always charged to PL as an expense immediately. Understood? Any doubt? Any doubt? No doubt. Correct. Now one clarification has been given that past expense not to be recognized as an asset means any expense which is already charged to PL as an expense cannot be reversed and cannot be recognized as an intangible asset at a later date. Correct? Means any development expenditure which was recognized as an expense immediately because it does not meet the recognition criteria. Once the recognition criteria is satisfied, it cannot be again capitalized as an intangible asset. Already I have informed you about this. I'll take one question, but once I complete entire thing. Correct? Subsequent expenditure you can do. Coming to measurement subsequent to initial recognition. Now as per AS10, because as per AS10 there was two model, cost model, revaluation model, option was given. In case of AS26 intangible asset, no such option is available, only there is a cost model, means intangible asset cannot be revalued. It can be impaired as per AS28, but no revaluation is permissible, no revaluation is permissible. So only we have a cost model. After initial recognition, an intangible asset should be carried at what? Under cost model, under cost model, and no revaluation model means intangible asset cannot be revalued, understood? So cost model very simple, cost less accumulated amortization less accumulated impairment loss. Impairment loss will be as per AS28, amortization will be as per AS26. Can I say? It means we need to now understand only amortization part, Now coming to amortization is nothing but similar to depreciation. So if you know the meaning of depreciation, you know the meaning of amortization. So depreciable amount of intangible asset should be allocated on a systematic basis over the useful life of an intangible asset. Treatment, of course, can I say it will be recognized as an expense unless it can be capitalized as per the requirement of other accounting standard. For example, can I say depreciation and amortization expense of any asset can be capitalized to the cost price of inventory or cost price of PP as required by respective accounting standard. If that is not permissible, means if it is not capitalized, it will be always charged to PL as an expense. Correct? For example, just try to understand the amortization of an intangible asset which is used in production process. For example, if you are using some patent or know-how in the production of a inventory, so the amortization of that intangible asset will be included in the cost price of inventory. Therefore, it will be capitalized and will not be charged to PL as an expense. This is an exception to this case. If no capitalization, then it will be charged to PL as an expense. Amortization period. Can I say amortization period will always commence when the asset is ready or available for use. Ready or available for use. Understood? Correct. Now, for amortization, AS26 has taken one rebutable presumption. What is that rebutable presumption? AS26 adopt a rebutable presumption. Rebutable presumption means any presumption has been taken without any logic. Means for that there is no evidence. Means without any logic, one assumption has been taken. Correct now. So if you ask me what is the concept behind that I can't say. So when a rebutable presumption has been taken, for which you are not supposed to ask any queries, for this you are not supposed to ask any doubt. Correct? So AS20 adopt a rebutable presumption that useful life of an intangible asset will not exceed 10 years from a date when the asset is available for use. So it is assumed that intangible asset useful life will not exceed 10 years unless longer life is justified. Unless longer life is justified means whenever question is silent about the useful life of intangible asset, will always take 10 years. Will always take 10 years. Correct? Now depreciable amount is what? Cost minus residual value. Residual value for intangible asset, residual value will be always assumed to be 0. For intangible asset, residual value will be always assumed to be 0 unless there is a commitment by third party that they can purchase the asset at the end of useful life, or there is an active market for that intangible asset. For intangible asset, normally residual value is 0. Therefore, they are saying it will be always assumed to 0 unless these circumstances arises. Means from examination point of view, they will take residual value as per the information given in the question. Amortization method, same amortization method, SLM, RBM, or PUM, straight line method, reducing balance method, production unit method. However, in this case, one exception has been given. If the pattern cannot be determined reliably, means if you are not able to estimate whether we should go for SLM, RBM, or PUM, then straight line method should be used. Understood? Understood is fine. Chalega? Yes, sir. Now, review of amortization period and depreciation period. The amortization method should be reviewed at least at the end of each financial year. Such changes is accounted as per AS5. But just try to understand in this thing, there is one what as per AS10. Just try to understand any changes in useful life is changes in accounting estimate. Changes in residual value is changes in accounting estimate, and changes in depreciation method is an accounting estimate. Means can I say as per AS10 right now we have done before break that changes in useful life, changes in residual value, changes in depreciation method from SLM to RBM will be a changes in accounting estimate. And we'll do accounting prospective accounting. Correct. But as per AS26, because can I say AS10 was revised in recent time, but AS20 is not yet revised, means it is very old accounting standard. Correct now. So as per AS26, this is accounting estimate, but this is accounting policy, which is not correct. I will say, which is not correct. From examination point of view, if they ask, so of course as per AS26, changes in depreciation method will be accounting policy as per AS26, but as per AS10 it is changes in accounting estimate. To be careful about this point. From my point of view, they will ask this question, they will not ask this question in exam, because there is a controversy regarding this and there is no revision under AS26. When you come to CA final, we'll say it is accounting estimate in both cases. When you come to CA final, we'll say both are accounting estimate only. So of course it is an accounting estimate, but because there is no correction in accounting standard 26, therefore we need to say it is changes in accounting policies. Understood what I am saying? Have you understood this point? Yes sir, we have understood. Correct. Then impairment loss will be calculated as per AS28. AS28 will do in detail in some other day. Correct. Now, as per AS26, what AS26 says that there are two type of intangible asset. There are two type of intangible asset for which we'll do impairment testing on annual basis irrespective of indicators. I hope if you have done AS28 to AS28 say that AS28 will be applied only when there is an indicator of impairment. Only when there is an indicator of impairment, but there are two intangible assets. There are two intangible assets for which impairment is done annually irrespective of indicator. One intangible asset which is not yet available for use, means any intangible asset under development phase which is not yet available for use. So for that type of intangible asset will do impairment on annual basis without any indicator. So any intangible asset that is not yet available for use, means under development phase, or any intangible asset that is amortized over a period exceeding 10 years from the date when the asset is available for use, means for which you have taken longer life. Suppose you have taken 15 year or 20 year, for that you will do annual impairment testing irrespective of indicator. Irrespective indicator can be important for MCQs, can be important for MCQs. So there are two intangible assets for which we do annual impairment testing irrespective of indicator. Can you repeat with me? First, intangible asset not yet available. Intangible asset not yet available for use, means any intangible asset under development phase and development phase is not yet completed. Second, intangible asset for which amortization period is more than what 10 years, for which amortization period is what exceeding 10 years. Understood this much? Now coming to amortization period. For amortization period, so there are two things. One is goodwill, one is other than goodwill, other intangible asset. Because this is covered under AS 26, but this is covered under AS 14 because goodwill is calculated only in amalgamation chapter. So this will come under AS 14. Now in this there's maximum useful life has given 10 years, and here the maximum life they are given 5 years. Means goodwill will be amortized in how many years? 5 years. It cannot be 10 years because goodwill is covered under where? Goodwill is covered where? Under AS 14. Under AS 14. Understood this point? So for goodwill the maximum amortization period is 5 years because that is covered under AS 14, not under AS 26. Other intangible assets maximum life is what? 10 years, unless longer life can be justified. Unless longer life can be justified. Longer life can be justified means there is some evidence of longer life. For example, let me take one example. Suppose you purchase a license, and as per the contractual agreement that license can be used for 20 years. So of course we have a evidence that life of that is not 10 years, that is 20 years. So for that you will not take 10 years, for that you will take 20 years. If that is not justified, if you can't estimate the life of an intangible asset, the maximum life you can 10 years, or you can take less than 10 years. Means that will be as per the information given the question. Now in question says 6 years, so we will take 6 years, but we can't take more than 10 years. Understood? Have you understood this point? Correct? Thank you, Santosh. Thank you very much. Now coming to derecognition, what we'll do? Retirement is not important from examination point of view because AS10 says that if an asset is retired from an active use and held for disposal, that will be carried at carrying amount or NRB, whichever lower. But in this case they are saying it should be retired and should be carried at only carrying amount, at its carrying amount. In this case we will not do lower of carrying amount NRB. So for intangible asset, if there are some intangible assets which are retired from active use and held for disposal, will be carried at its carrying amount at the date when the asset retired from its active use. Derecognition, same to same what we have done under AS10, and intangible assets will be derecognized or eliminated from the balance sheet if it is disposed of or when no future economic benefit are expected from its use or subsequent disposal. We need to find out a gain or loss on derecognition. Gain or loss on derecognition will be sale proceed less cost of disposal. This is net sale proceed less carrying amount. This will be gain or loss, and that will be transferred to profit and loss account. Understood? Scope AS26 should be applied for all intangible assets except which are covered in other accounting standard. Means if any intangible asset is covered under other accounting standard, so of course scoped out from this chapter. For example, intangible assets that are covered by another Ind AS, intangible asset held by entity for sale in the ordinary course of business, means any intangible asset which are inventory will be covered under AS2. Means any intangible asset, means suppose if we are dealing in software, we are a dealer of software, so that software is inventory for us, then AS2 will be applicable, AS26 will not be applicable. Deferred tax asset, deferred tax asset is also an intangible asset but covered under AS22. AS22 leases that fall within the scope of AS19. Suppose you have taken some intangible asset or lease, then AS19 will be covered, AS26 not covered. Goodwill arising on amalgamation, goodwill arising on consolidation will not be covered under AS26 because AS14 and AS21 will be applicable. This is a separate chapter, we'll do separate revision for that. Financial asset is new term for you because this is not used in CA Inter, but financial asset is nothing but receivable. So can is receivable are monetary item, so receivable are monetary item, so they are not what? Intangible asset, they are not intangible asset, correct? Any mineral right and expenditure on the exploration for development and extraction of mineral wire, etc. There is no accounting standard for that, so AS20 is not applicable for right of extracting mineral, etc. Intangible asset arising in the insurance company, intangible asset which arises in case of insurance company outside the scope of this chapter, there is no accounting standard on this. Expenditure in respect of termination benefit, this will be covered under AS15 and therefore outside the scope of this chapter. So termination benefit will be covered under AS15, you will be able to understand. This might be important for MCQs. MCQs में they may ask you what is covered, what is not covered under AS26. चलेगा? Got this point? Thank you Valipi. What is your name? Padmanabhan, whatever, correct. Thank you very much for your appreciation. And so disclosure you do by your own. Disclosure you need to read. They will not ask any specific question disclosure, but you need to read. If suppose they ask some theory question disclosure, write something about the AS26, you need to memorize it and write down. So AS26 is also completed from my point of view. I hope you have understood AS26. Let us take some question. But you have understood that once you have done AS10 in detail, AS26 will be only I will say a cup of tea for you. Chalega? Yes sir. Come to some question of AS26. AS26 questions. Chalo. Question number 1 is one of the favorite question of institute. They will normally ask this type of question. Swift Limited acquired a patent at a cost of 80 lakh for a period of 5 years and the product life cycle is also 5 years. The company capitalized the cost and started amortizing the asset at 10 lakh per annum. Correct. After 2 years, it was found that product life cycle may continue for another 5 years. Means there is changes in useful life. So first year, second year, can you say amortization will be 10 lakh, 10 lakh. So out of 80 lakh, can you say how much you have amortized? How much you have amortized? 20 lakh you have amortized. So what is the unamortized cost? 60 lakh is the carrying amount. Now this 60 lakh will be now amortized in the remaining 5 years. Remaining is after changes in the useful life. What they want to say? The net cash flow from the product during these 5 years we are expected to be this itna respectively. Means can now 60 lakh will be amortized in this ratio. So you can see they have given 36 lakh, 46 lakh, 44 lakh, 40 lakh, 34 lakh. This become 2 crore. So you can see 60 lakh divide by 2 crore you will do into what? 36. So it is coming how much? 10 lakh 80,000. So you can see 10 lakh 80,000 for the third year. Then you can do in that ratio. So this is the amortization of 60 lakh in the remaining 5 years based on the expected cash flow. Understood? So this is very popular question, can be asked. After doing that, now I will suggest you, because ICI answer they are giving, just find out this ratio. What is the ratio of amortization? This you can find out. 10 divided by 80. Because 10 divided by 80, it is coming 0.125. So 10 divided by 80. 10.8 divided by 80, 13.8 divided by 80. Just find out this amortization ratio. After doing this, so first do amortization, then find out amortization ratio, because in every question, in every solution, ICI is giving this amortization ratio. So you just also try to give this amortization ratio. Understood? Chalega? Very simple. Then This is also one of the important questions during 2001-2002. The enterprise incurred cost to develop and produce a routine low risk computer software. Means they are developing some software research and development phase. What is given? Completion of detailed program and design, coding and testing, other coding costs, testing costs, product master for training material, packing the product. So these are the phase 1, phase 2 is given. Once you read the question, you will not be able to understand what to capitalize, what not to capitalize. Till you read the last point. After completion of phase 2, it was established that product is technically feasible for the market. Means can I say this cost will be charged to PL, because these are, even though it is under development phase, but the recognition criteria was not satisfied because there was no technical feasibility to complete the intangible asset. So this will be charged to PL. Now other coding cost, this will be capitalized, testing cost will be capitalized, product master for training material. Just try to understand, whenever we develop some software, so first we create one master file. That master file will be stored in a device, and from that master file will copy and will make our training material to distribute or to sell that training material. For example, if I am recording my classes, so once the classes are recorded, there will be one master file. Now once you want to purchase that recorded classes from me, so I'll copy from my master file and I will sell it to you. So that master file is my what? That master file is my intangible asset, and the copy whatever I am doing, that is my inventory. This is my inventory. So if you are doing packing of the product, means suppose I am giving you after copy, I am selling that. So that packaging I am doing for what? The inventory, that is not included in the cost price of intangible asset. So this will be charged to PL. Of course, product master file, this will be capitalized. So this three will be capitalized. So you can see what is the capitalized cost. Means intangible asset will be this plus this 1,500,000 will be the capitalized cost. So this will be the cost price of intangible asset. Very good question, have been asked in exam, can be again asked in exam. Chalega? Yes sir. Can we move? This is also very important question, can be asked in exam 2-3 times, already asked, can be again asked. Messer Pasa Limited is developing a new production process. During the financial year ended 31st March 2019, the total expenditure incurred on the process 80 lakh. So during the year 31st March 2019, what is the total expenditure? 80 lakh. The production process made the criteria for recognition as an intangible asset on 1st November 2018. Means on 1st November 2018, the recognition criteria was satisfied. Expenditure incurred till this date was 42 lakh. Further expenditure incurred on the process for the financial year 31st March 2020, means next year, was 90 lakh. As on 31st March 2020, the recoverable amount of know-how embodied in the process is estimated to be 82 lakh. This include estimate of future cash outflow inflow you are required. Means if I just explain you the question, what they want to say. This is 31st March 2019, this is 31st March 2020, and on 1st November they meet the recognition criteria, correct? The total expenditure was 80 lakh. Out of these 42 lakh, now out of these 42 lakh was incurred up to this date. 42 lakh to 80 minus 42, how much? 38 lakh was incurred on this date. And then in the second year, how much cost has been incurred? 90 lakh has been incurred, and the recoverable amount is 82 lakh. 90 lakh has been incurred and the recoverable amount is given 82 lakh. This is the entire question. So can I say this will be charged to PL as an expense, because can I say recognition criteria was satisfied at this point of time. So before that, any expenditure income will be charged to PL as an expense, even though that was incurred under development phase, correct? Can I say this will be capitalized, because once the recognition criteria is satisfied, then expenditure incurred in development phase will be capitalized as an intangible asset. So what is the carrying amount? As on this date, carrying amount become 38 lakh. Then this will be added, 90 lakh will be added. So 38 plus 90 is equal to what? 128 lakh. Right now, when I was doing AS 26, I say there are two intangible assets for which we'll do annual impairment testing without indicator, irrespective indicator. So can you say this is the carrying amount and the recoverable amount is 82. Now if you know AS 28, then you know that recoverable amount, if the recoverable amount is less than carrying amount, then the difference will be impairment loss. So impairment loss become how much? 46, and this 46 will be charged to PL as an expense immediately as per the requirement of AS 28. This is the entire thing. Very simple, but you write down properly. What is the answer given? Let's see. What is the expenditure to be charged to PL for the first year? expenditure to be charged to PL in the first year, 42 lakh is recognized as an expense because the recognition criteria will not met until 1st November 2018. This expenditure will not form part of the cost of the production process, recognized as an intangible asset in the balance sheet. Will not be an intangible asset. Then carrying value of intangible asset as on 31st March 2019, that will be what, 38 lakh. So 38 lakh will be the carrying amount. Then expenditure to be charged to PL account for the next year. So can you say what is the total carrying amount? 182, recovery about 82. So impairment loss is 46. So this will be charged to profit and loss account as an expense. What is the carrying value of intangible asset? So book value was 128, accumulated impairment loss 46. So carrying amount to be shown in the balance sheet is 82 lakh. Good question, 4 marks question, 5 marks question can be asked. Super easy question, or this question can be also asked in the form of MCQs also. Got this point? Have you understood? Chalega? Now come to next point. A company acquired for its internal use as software on 1st March 2020 from UK for euro, for pound, you can say, means it is Great Britain pound, 1,50,000. Correct. The exchange rate on the date was 100 per pound. The seller allowed trade discount of 2.5%. The other expenditure were import duty. This will be capitalized. Additional import duty. This will be capitalized. Entry tax 2% recoverable. This will not be capitalized. Installation expense will be capitalized. Professional fee will be also capitalized. Compute the cost price. So in this case, can I say, first they have given how much pound? 1,50,000. Discount is also in pound, to 10% is the 2.5% discount. So less 2.5% discount. This become what? Your intangible asset in foreign currency. Now can you say in this AS11 will be applied? AS11 says that whenever you record any transaction on transaction date, then you should use the transaction date exchange rate, and that is given 100 per pound. So multiplied by 100, so this will come the cost price of intangible, means purchase price or invoice price, you can say, of intangible asset. Now in this will add import duty, add 10%. So once you add 10%, this amount will come. Now only one doubt will come, why I am doing this question. This 5% will be calculated on this or will be calculated on this amount. Here only you can do mistake. Understood? So they have given additional import duty is 5%. Whenever there is an additional import duty now, so it will be calculated on this amount. Be careful. Here only you can do mistake. So you can see this amount 160,87,500 is the amount calculated after 10% import duty. On this amount you will calculate 5%. Just check what is the 160,87,500 into 5%. Same amount is coming, 8,04,375. This is danger. I said that I will identify the area where you can do mistake. This is danger where you can do mistake in exam. Correct. Then you will add installation expense and professional fee. This become the cost of software to be capitalized. Chalega. Always write down in exam that entry tax, because it is recoverable, it will not be included in the cost price of intangible asset. Chalega. 24 is also good question, already asked in exam. Naresh Limited had the following transaction during the financial year. Naresh Limited acquired running business of Sunil Limited for 10,80,000 on 15 May 2019. The fair value of Sunil Limited net asset is 5,16,000. So they have acquired a business. Can I say it is a question of amalgamation? What is the PC? 10,80,000. What is the fair value net asset? 5,16,000. So 10,80,000 minus 10,80,000 minus 5,16,000. So goodwill will be equal to how much? 5,64,000. Understood? Yes, sir. Naresh Limited is of the view that due to popularity of Sunil Limited product in the market, its goodwill exists. Okay, it does not mean popularity or whatever. We need to apply AS14. AS14 says the goodwill will be the balancing figure of PC and the fair value of net asset. Okay. Naresh Limited had taken a franchisee on July 2019 to operate a restaurant from Sankar Limited for rupees 1,80,000 and at an annual fee of 10% of net revenue after deducting expenditure. The franchisee expired after 6 years. Net revenue was 60,000 during the financial year 2019. So, okay, useful life is 6 years. It is less than 10 years acceptable, and the cost price is 1,80,000. So it will be capitalized. It will be recognized at 1,80,000 and depreciated or amortized during how many years? 6 years. On 28 August 2019, Naresh Limited incurred a cost of 2,40,000 to register the patent for his product. Naresh Limited expect the patent economic life to be 8 years. So incurred cost means this is acquired, so 2,40,000 will be the cost and the useful life will be 8 years, which is less than 10 years. Justified. Justified. Naresh Limited follow an accounting policy to amortize all intangible assets on straight line basis over the maximum period permitted by accounting standard, taking a full year amortization in the year of acquisition. This is not correct. Can you say maximum period? Not maximum period is the 10 years is the maximum period, means if the useful life is less than 10 years, so it should be amortized in that lesser period, not maximum period. Goodwill on acquisition of business to be amortized over 5 years, even though not given, can I say it will 5 years? So it is quite possible the question is silent about this, because goodwill will be amortized based on AS14. AS14 says 5 years, correct? Previous schedule showing the intangible asset section in the balance sheet. So can I say in the balance you write on asset, then you write on non-current asset, in that you write on intangible asset, and you will prepare note for this. In that goodwill will come, franchisee will come, patent. And now in this question they have said ki do amortization for the full year of amortization in the year of acquisition, means even though it was acquired in the mid of the year, amortization will be done for the full year. So we'll go as per the question only, he will do amortization for full year amortization in the year of acquisition. So can you say goodwill was 5,64,000, तो डेप्रीशिएशन विल बी हाउ मच बताओ, 5 डिवाइड बाय 5 कर दो, तो डेप्रीशिएशन 5,64,000 डिवाइड बाय 5 इज इक्वल टू 1,12,800 एंड दिस विल बी द कैरिंग अमाउंट, दिस विल कम इन द बैलेंस शीट, तो बैलेंस शीट में आ गया. देन 1,80,000 was the franchisee depreciation for 6 years, divided by 6 it will come 30,000, so 1,50,000 will come in the balance sheet, 1,50,000 they have disclosed. Patent same thing, with simple, it will come after amortization, this will become intangible asset. Good question, can be asked in exam. Out of miss, from my point of view, these are some expected questions. The other question of course you are supposed to do, I have taken only some expected questions. I think you have done understood. AS26 also cover. Can we go to some one last accounting standard for today, the last accounting standard, can we do? Yes sir. So last accounting standard is what? AS16. AS16. Bada, are you able to follow me or not? Are you able to follow me? I am taking 2-minute break. After 2 minutes, I will start AS16. Chalo. So we'll start AS16, borrowing cost. Once again, one of the important accounting standard, one question is 100% expected from this particular topic. Correct? Now borrowing cost means interest cost or any other cost in connection with the borrowing of fund. So interest cost or any other cost in connection with the borrowing of fund. In connection with the borrowing of fund means, can I say any cost of equity or any preference share capital should not be considered as borrowing cost. So borrowing costs do not include the actual or imputed cost of owner capital. That is what equity or preference share capital means. Preference dividend, whatever you are paying, whatever company is paying, that is not a borrowing cost. That is not a borrowing cost. Why they have said actual? Can I say in case of equity, because now you have done FM, there is some cost of equity for retained earning also. Retained earning is equity, that is imputed cost, so that will also not be a part of borrowing cost. In simple word, in connection with the borrowing, this borrowing can be what? Short term borrowing, it can be long term borrowing, that is okay, but only in connection with the borrowing fund. Now what are the examples of borrowing costs? Examples of borrowing costs means borrowing costs include interest and commitment charges on borrowing, means any interest or commitment charges on borrowing, any amortization of discount on issue of debentures or bond. So of course debentures and bonds are also borrowing, so any amortization of discount in case of debentures or bond, any amortization of premium payable on redemption of debentures amount. If you have issued a debenture and on debentures are redeemed at a premium, so that premium is also one type of borrowing cost. It is also one type of borrowing cost. So any amortization premium or redemption of debentures amount, any amortization of ancillary cost in connection with the borrowing of fund. For example, suppose you have issued debenture and you have paid some underwriting commission. So underwriting commission is also some ancillary cost, or you need to pay some brokerage for arranging some loan, or you have given some fees to chartered accountant for arranging some loan. So that is also what ancillary cost in connection with the borrowing. So that will be also borrowing cost. Correct? Understood? Any finance charges in respect of asset acquired under finance lease or under other similar arrangement. Abhi right now we have not done lease, but you know about AS 19. So under finance lease, can you say we calculate interest expense, so that interest expense will be also borrowing cost, but this will be automatically covered under AS 19. So abhi right now we will not discuss about this. Last, any exchange difference arising of foreign currency borrowing to the extent it is regarded as an adjustment to interest cost. Last point I will do at the end of the chapter. So exchange difference, of course this is related to thoda sa AS 11, so this point I will discuss at the end of the chapter today only. Correct? Understood? So can you repeat with me? Borrowing costs include interest and commitment charge. It include discount, amortization of discount on debenture, discount on issue of debentures amount, amortization of premium on redemption of debentures amount, amortization of ancillary cost in connection with the borrowing. It also includes finance charges in respect of finance lease, in respect of asset acquired under finance lease. Correct? Or exchange difference arising from foreign currency borrowing to the extent it is regarded as an adjustment to interest cost. So this point will automatically understand. One clarification has been given. Sometimes just try to understand, we have taken loan for 10 years, and because now we have surplus fund, we want to do some early repayment to bank. Correct? So if whenever we do prepayment to bank, means before 10 years, when we do prepayment to bank, the bank will charge a penalty for that, because that prepayment will result in the loss of interest to the bank. Because that is loss of interest to the bank, the bank will charge some penalty for prepayment. So any prepayment fine paid to the bank for redemption of loan is not a borrowing cost, because that is not in connection borrowing, that is in connection with repayment. So any cost incurred in connection of repayment of borrowing is not a borrowing cost, chalega. So what is the accounting treatment? Means what is the objective of this chapter? Objective of this chapter is to identify whether it will be the borrowing cost will be capitalized to the cost price of asset, or it will be charged to PL as an expense. Means what will be the accounting treatment, to whether it will be capitalized to the cost price of asset, or it will be charged to profit and loss account as an expense. So what AS 16 says that if the borrowing costs are directly attributable to the construction, acquisition of or production of a qualifying asset, then it will be capitalized. Means any borrowing costs which are directly attributable for construction, acquisition or production of a qualifying asset, that borrowing cost will be capitalized to the cost price of that particular asset. Correct? Now construction, can you see, normally we construct we construct property, plant and equipment, correct? And construction will include the development, means the construction word will include development. So we develop intangible asset, correct? Can you say we acquire property, plant and equipment, we acquire intangible asset, we acquire inventory, we acquire investment, correct? Production, can you say we normally we say production is for inventory, production is for inventory. So you can see normally all type of assets are covered, but only those assets which will meet the definition of a qualifying asset. It means, can I say all assets are not qualifying asset? Inventory may or may not be a qualifying asset, PP may or may not be a qualifying asset, investment may or may not be a qualifying asset, intangible asset may or may not be a qualifying asset. So only qualifying asset the capitalization is permissible. If it is not a qualifying asset, then capitalization is not permissible. So it means first we need to identify whether that asset is a qualifying asset for this chapter or is not a qualifying asset. So what is the meaning of qualifying asset? What they are saying, qualifying asset are those assets, qualifying assets are those assets which take substantial period of time for getting ready for its intended use or for sale. Means any asset which is taking substantial period of time, any asset which is taking substantial period of time for getting ready for its intended use or sale is a qualifying asset. Chalega? Have you understood? Now the question is that, sir, what do you mean by substantial period of time? What do you mean by substantial period of time? One thing you have understood, once you have understood the meaning of qualifying asset, we'll do detailed discussion right now. Borrowing cost, if it is directly attributable to acquisition, construction or production of qualifying asset, then capitalize. Other borrowing costs which are not directly attributable to the acquisition, construction or production of a qualifying asset will be recognized as an expense in the period in which they are incurred. Means any other borrowing costs which are not capitalized will be charged to PL as an expense, correct? Now what is the substantial period of time? So one explanation has been given for substantial period of time. What they want to say, a substantial period of time primarily depends upon the facts and circumstances of each case, but they have given one limit, that if an asset takes a period of 12 months, or more than 12 months is considered as substantial period of time. So one explanation has been given that if any asset takes 12 months or more than 12 months for getting ready for its intended use or sale, then it will be always a qualifying asset. But it does not mean that any asset which takes less than 12 months is not a qualifying asset. Means it may be also qualifying asset in that case, depending upon the facts and circumstances. So there is one misconception in the mind of student. Just try to understand what I want to say. Substantial period of time. So if any asset takes more equal to or more than 12 months, can you say it will be always a qualifying asset? Means no judgment required, it will be always a qualifying asset. There is no need to apply any judgment. But if it is taking less than 12 months, then on this judgment applies. Apply judgment based on facts and circumstances. Means just try to understand, suppose you are constructing one building. Nowadays the building can be constructed in 6 months, 7 months, 8 months. So it does not mean it is not a qualifying asset. That is also a qualifying asset. But we need to apply judgment based on the facts and circumstances, correct? Means, can you say it may be a qualifying asset or may not be a qualifying asset? Understood? Depending upon the information given the question. I'll just give you one hint. So suppose a question is asked from this chapter. Question is of AS 16. A question is of other accounting standard. Other accounting standard means AS 10, AS 26, where they have given some information of borrowing and the borrowing cost can be capitalized. So there can be two type of question. Specific AS16. Then what you need to conclude? Correct? Means we are doing when the substantive when the period is 12, when the period is less than 12 months. When the period is less than 12 months. Correct? Then what assumption you are supposed to take? What assumption you are supposed to take? Understood? So in this chapter, whenever it is constructed asset, always assume qualifying asset. Always assume qualifying asset. Correct? Means suppose any asset is constructed and they have taken 9 months. 9 months. So always assume it is a qualifying asset, because in that case only you will calculate borrowing cost to be capitalized. Otherwise, so the mere objective of the question is defeated. A question is of what? Borrowing cost, means calculation of borrowing cost to be capitalized. And they have given one building which is going to be constructed and the construction will complete 9 months, and if you will assume that it is not a qualifying asset, the question of calculation of capitalization of borrowing cost will not be applicable only. The mere objective of this particular question will be defeated. Correct? Now, so whenever they have given constructed asset, always assume a qualifying asset. Whenever they have given purchased asset, because purchased asset, can I say any acquired asset is normally ready for use, ready for its intended use on the date of purchase only. Therefore, it does not take substantial period of time and no information has been given. Then you can assume it is not a qualifying asset. Understood? But in this, suppose in this chapter, suppose they have given substantial, they have given period of time which is less than 12 months. So I will say take assumption and do accordingly. Do accordingly. If the question is silent, suppose they have given one property, plant and equipment for which the period of time of construction is 9 months and they want you to calculate a cost price of PP. Now 9 months can be substantial, 9 months may not be substantial. I will say take your assumption and do it. Most of the cases I will say take assumption it is a qualifying asset and do it. Means I will say better to assume as a qualifying asset if the loan amount and the rate of interest is given. I am saying when the question is silent, if the question already said it is not a qualifying asset, then don't calculate. This I am just giving totally from exam point of view. Totally from exam point of view. Understood what I am saying? Have you understood this particular point? This is totally from exam point of view. Once again I am saying. Now, you have understood that any asset which takes 12 months or more than 12 months for getting ready for its intended use or sale, it will be always a qualifying asset. Means any asset which is taking less than 12 months, it is a matter of judgment depending upon the facts and circumstances of each case. However, AS16 has specifically excluded this type of asset from the definition of qualifying asset. First, assets that are ready for their intended use or sale when acquired are not a qualifying asset. Means any asset which you purchase and on the date of purchase they are available for use or available for sale, then that is not a qualifying asset. For example, can I say purchase of inventory, okay, that is available for use or available for sale. Correct? Can I say purchase of car? So you can use car on the date of purchase and that does not require substantial period of time for getting ready for its intended use or sale. Even though you have purchased car by taking a loan, the interest cost will not be capitalized. Interest cost will not be capitalized. For example, purchase of investment. Purchase of investment. Can say when you purchase any investment, equity shares, etc., it is available for sale. Once it is acquired, means it is substantial period of time is not required for getting ready for it to make it available for sale, and therefore it is not a qualifying asset. Correct. Second, those inventory, this very special point, those inventory that are routinely manufactured or otherwise produced in a large quantity on a repetitive basis over a short period of time, are not a qualifying asset, थोड़ा सा I will discuss detail about inventory. Inventory means if it is purchased, whether it is raw material or stock in trade, can I say it is not a qualifying asset? Correct. Now it is manufactured. It is manufactured. Correct. Manufacture. Can I say either it will manufacture in large quantity? Large quantity. Or normally can I say, if you say big item are purchased individual, are constructed or manufactured individually. For example, if you are doing manufacturing of a big plant, so one by one you will manufacture, you will not manufacture in large quantity. But if you are manufacturing calculator, so calculator will manufacture in large quantity, in bulk. Understood? So I will say manufactured. I'm not right large, small quantity. Can I say manufacture item by item or unit by unit basis? But you can say I should write down, better write down small quantity. Or you can write down one by one. For example, when you are constructing a building which is held for sale in the ordinary course of business, so you will construct one building, then one building, so it is not in large quantities. Correct now. So of course, can I say it may be a qualifying asset? It may be a qualifying asset, I am saying. Why? Depending upon the substantial period of time. The large quantity they are produced in a routine process. Routine process, or sometimes we produce large quantity based on the customer demand. Means once the demand will come, then we'll produce based on the customer order, you can say, based on the order. So that is not routine manufacturing process. So manufacture in large quantity in a routine process, or based on the order. Can you see you are producing only based on the order? So this may be also qualifying asset. This may be a qualifying asset. But routine process in small period of time, it is not a qualifying asset. It is not a qualifying asset. Now what is small period of time that is not defined? Small period of time is not defined. Of course it is less than 12 months. Small period of time, it is not defined. Of course it is less than 12 months. Then it is not a qualifying asset. So they are just giving one clarification. Any inventories which are manufactured or otherwise produced in large quantities in a routine process in a small period of time, it is not a qualifying asset. Then don't apply judgment, it will not be a qualifying asset. That clarification they want to give. I hope thora you have understood, but that type of detailed question they will not ask in CA inter level. Understood this point? Have you understood this point? Now coming to the amount of capitalization. Now for the amount of capitalization, all the borrowings are divided in two parts. One is known as specific borrowing, one is known as non-specific borrowing. For specific borrowing, very simple, entire borrowing cost will be charged, entire borrowing cost will be the amount of capitalization. Means first you calculate actual borrowing cost incurred, correct? Now actual borrowing cost incurred, just write down actual borrowing cost incurred during capitalization period, during capitalization period, irrespective of expenditure on qualifying asset. So you need to find out actual borrowing cost incurred during the capitalization period, correct? Now normally suppose you have taken a specific borrowing for the construction of a building. Suppose you have taken a loan of 10 lakh at a rate of 12%. So how much it happen? 10 lakh into 12%. It is coming how much? 1,20,000. So 1,20,000 is the borrowing cost for that particular year. Now suppose out of 10 lakh, right now for the first year for construction you require only 4 lakh. So 6 lakh is idle. So as a prudent businessman, can this 6 lakh you will invest temporarily outside a business to save some to earn some interest income. So it is quite possible that you have earned some income from the temporary investment of that fund, borrowed fund, correct? Now so suppose you generated an interest income of 20,000, so the net amount 1 lakh will be capitalized. Means this 20,000 interest income will not be credited to PL. This is deducted from borrowing cost and net amount will be capitalized the cost price of what? Qualifying asset. Understood? So very simple. Specific borrowing, actual borrowing cost incurred less income from temporary investment, this will be the amount of capitalization, correct? Now coming to non-specific or general borrowing. To explain this I will take one question. Correct? So come to one question. Come to one particular question. AS16. Come to this question. Very important. Normally this type of question they ask in exam. X Limited began the construction of new building on 1st Jan 2007. Correct? It obtained 1 lakh specific loan to finance the construction of building. So 1 lakh become a specific loan on 1st Jan 2007 at an interest rate of 10%. The company's other outstanding two non-specific loans. So they have two non-specific loans outstanding. When they are saying outstanding, so it is outstanding from the beginning. From the beginning is from 1st Jan 2007. There are two 11% loan, amount is 5 lakh, 13% loan, amount is 9 lakh. Expenditure that were made on the building project were as follow: Jan 2007 2 lakh, April 2007 2 lakh 50,000, July 4 lakh 50, December 1 lakh 20. Building was completed by 31st December 2007. So of course it is taking 12 months. So of course it is what? A qualifying asset. Following the principle of AS16, calculate a borrowing cost to be capitalized and pass one journal entry. One journal entry means compound journal entry for capitalizing the cost and borrowing cost in respect of building. Correct? So how to calculate this? Now can you say first what we'll do? First we'll calculate borrowing cost. So you can see there is one specific loan and there are two non-specific loans. Correct? So first what we'll do, we'll calculate borrowing cost. So borrowing cost of course we can calculate. So you can see borrowing cost, or should I do by our own, or you can understand from this? Correct? Bolo. Better I will explain. Now. So first step is what? Calculate borrowing cost. So there is one specific borrowing. What is the amount of loan? 1 lakh. Rate of interest is 10% and this was outstanding for 12 months. So this is coming 10,000. 10,000 is on specific loan. Then we'll come to non-specific borrowing. Non-specific borrowing. So there are two borrowing. One is what? One is 11% 5 lakh. 11% 5 lakh. So first is 11% loan. Amount is 5 lakh into 11%. This is also outstanding for 12 months. So it is 5 lakh into 11%. How much? 55,000. 55,000. Then there is one 13% loan. 13% loan. What is the amount? Amount is what? 9 lakh. So 9 lakh into 13% into 12 by 12. So 9 lakh into 13%. How much it is coming? It is 1 lakh 17,000. So total this borrowing cost is how much? Plus कर दो 55,000, that is 1 lakh 72,000, and the total borrowing cost become 1 lakh 82,000. So first we need to calculate borrowing cost. Understood? Now second step is what? We need to calculate capitalization rate. We call it capitalization rate. Capitalization rate we calculate for non-specific borrowing whenever there is more than one non-specific borrowing. So you can see there are more than one non-specific borrowing. So we calculate one effective rate of interest. Means we'll find out what can be the effective rate of interest. So what we'll do? This is the total borrowing cost 1,72,000 divided by weighted average borrowing fund, because you need to see that borrowing is outstanding for how many months during that year. So of course can I say this 5 lakh is outstanding for how many months? 12 months. And this 9 lakh is outstanding for how many months? 12 months. Because in this question both are outstanding for 12 months, so it is very simple. But it is quite possible in your exam the first loan is outstanding only for 6 months and the second loan is outstanding for 9 months. So interest will be also calculated for 6 months, 9 months. So here also you will do 6 by 12 and 9 by 12. Be careful about that point. This type of question can be asked. So this is very simple. Can I say it will become 1,72,000 divided by 9 plus 5, 14 lakh. 14 lakh. So 1,72,000 divided by 14 lakh is equal to how much? It is 12.2. It is 12.285%. You can say 12.285%. Understood? This is the second step. So capitalization rate we calculate always for non-specific borrowing whenever there are more than one non-specific borrowing. Correct? Now we'll do calculation of average expenditure. Now we'll do calculation of average expenditure. So you can see they have given expenditure. First they have given in the month of Jan 2017. Then they have given in the month of April. Then they have given in the month of July. Then they have given in the month of December 2017. Correct? That is only given. So we'll of course we'll assume that expenditure has been done at the beginning of the month. So 2 lakh 50,000. So this is 2 lakh. So this expenditure will apply average for 12 months. So this will come 2 lakh only. Then it is 2,50,000. 2,50,000. This for how many months? 9 by 9 months. So 2,50,000 into 9 divided by 12. How much? It is 1,87,500. 1,87,500. This is known as calculation of average expenditure. Then 4,50,000. So 4,50,000. Can I say this is for how many months? July means 6 by 12. So 4,50,000 into 6 divided by 12. Can I say it is coming 2,25,000, and last is 1,20,000. 1,20,000 1 by 12 will do. 1,20,000 1 by 12 will do. So 1,20,000 means 10,000. So what is the total? Total is what? It is coming 2 lakh plus 1,87,500 plus 2,25,000 plus 10,000. It is coming 6,22,500. This is the average expenditure during the year. This is the average expenditure during the year. Can I say this expenditure will first made from a specific loan? So this expenditure first will use specific loan of 1 lakh and balance will be used from non-specific loan. Correct? So non-specific loan used for the purpose of construction is 5,22,500. Understood? Correct. So now we'll calculate borrowing cost to be capitalized. So borrowing cost to be capitalized. So expenditure from a specific borrowing. Expenditure from a specific borrowing is 1 lakh into actual rate, that is 10%. Means can I say this will be entirely capitalized? Means this will be entirely 10,000 will be entirely capitalized. 10,000 will be entirely capitalized. Correct? Now out of this how much will be capitalized, that we need to understand. So from non-specific borrowing, the expenditure is 5,20,500. On this will apply capitalization rate. Capitalization rate is what? 12.285%. 12.285%. So 5,20,500 into 12.285%, that is coming how much? 64189. So this is coming 74189. So this is what the amount of borrowing cost to be capitalized. Correct. So how much is charged to PL? Can I say charge to PL will be 1,82,000 minus 74,189. 74,189. Understood what I am saying? Have you understood? Correct. So this will be charged to profit and loss account as an expense. Correct. This is the entire calculation. This is the entire calculation. Have you understood? Correct. Have you understood? The same thing has been done. You can see they have also done 74,189. This has been capitalized. Now what is the total cost price of building? The cost price of building, the construction cost was this total means 10,20,000. In this we have added 74,189. This becomes the total cost price of building, and for this we have passed one journal entry, building account debit bank. This amount we have done. So one journal entry, because they have just only one journal entry, the one compound journal entry has been done. One compound journal entry has been done. Have you understood? Bolo. Correct. Now only to explain some more point about this. I hope you have understood. But can I say this point number 3 and point number 4 can be done in this way? Means we can do the calculation this way: Jan, April, then July and December. So can we do in this way? Ki in Jan, out of specific borrowing, means the total is 2 lakh. Can I say 1 lakh is from specific borrowing? So you will do 1 lakh into 12% into 12 by 12, that is 10,000. And balance is from non-specific borrowing, 1 lakh will do into 12.285% for 12 months. Can you say we can do in this way also? Same answer will come now. 1 lakh into 12.285%, that is coming what? 12,285. Correct. We can do in this way. I am just proving it. Then 2,50,000. April, it is 2,50,000. This is entirely from non-specific borrowing, 12.285% into 9 by 12. We can do in this way. So 2,50,000 into 12.285% into 9 divided by 12. How much it is coming? 23034. Then July, it is 4,50,000 into 12.285% into 6 by 12. How much is coming? 4,50,000 into 12.285% into 6 divided by 12. It is coming 27,641. And the last 1,20,000. This is also from non-specific. So 12.285% into 1 by 12 we can do. So 1,20,000 into 12.285% divided by 12. It is coming 1,229. 1,229. Now what is the sum total of this? So you can see 10,000 plus 1,2285 plus 23,034 plus 27,641 plus and 1,229. Same answer is coming 74,189. So you can do in this way also. Can I say this is nothing but a shortcut? Means what we have done, we have taken what? 12.285 as a common. So 12.285, 12.285, 12.2 has been taken as a common, and then we have done 12 by 12. Means average expenditure what? This is average expenditure. Then we multiply this by 12.285%. This is nothing but mathematics. This is nothing but mathematics. So either you can do in this way or you can do in this way also. Means some of the question of ICI has been done in this way, some of the question has been done in this way. Both are correct. Both are correct. Understood? But be careful about one point. Suppose in the month of Jan and in the month of April, let us suppose the expenditure was 50,000, and let us say in the month of April the expenditure was 3 lakh. Correct. Now what you will do? Just try to understand, because this 50,000 is for specific borrowing. So for specific borrowing you will take 12 by 12. Now here to the extent of 50,000, can I say it is specific, and 2,50,000 is what? Non-specific. Just try to understand. If this is the case, so can I say 50,000 always you will take 12 by 12 for the entire capitalization period, because for a specific borrowing, entire borrowing cost is going to be capitalized irrespective of expenditure. This is the important point. This question can be also asked in exam. So even though it is 3 lakh incurred in the month of April, but out of 3 lakh 50,000 is from specific borrowing, so you do 12 by 12. So if you are doing this method into 10%, 12 by 12 do, because for a specific borrowing, entire borrowing cost will be capitalized irrespective of expenditure. Even though expenditure not done, entire borrowing cost will be capitalized. But for this you will do 9 by 12. Have you understood this point? Have you understood this point? Boliye. Be careful about this situation. This question can be asked in exam. Be careful. Be careful. Utmost care. चलेगा? और आई विल से द सबसे अच्छा तरीका क्या है? फर्स्ट एलिमिनेट व्हाट योर मींस द टोटल एक्सपेंडिचर, दे हैव गिवन दिस एक्सपेंडिचर, तो आई विल से आउट ऑफ दिस माइनस व्हाट 1 लाख, तो दिस माइनस 1 लाख, तो अप्लाई ओनली ऑन दोज एक्सपेंडिचर विच आर इंकर्ड फ्रॉम नॉन स्पेसिफिक बोरिंग, मींस दे हैव गिवन टोटल एक्सपेंडिचर ना माइनस 1 लाख, and the balance on that apply average expenditure, correct now? So if you are doing minus 1 lakh, so 50,000 minus, here 15,000 minus, so automatically you are doing average expenditure on 2,50,000. So I will say just ignore the expenditure from specific borrowing, because any expenditure from specific borrowing, on that entire borrowing cost will be capitalized. Got this point? Have you understood? I hope you have understood. Now you can read. Following steps will be applied. Calculate the actual borrowing cost on specific borrowing and non-specific borrowing, that we have done. Calculate capitalization rate. Capitalization rate will be actual borrowing incurred, actual borrowing cost होगा, actual borrowing cost incurred during the year divided by weighted average borrowing fund. This is also very much important. This is time weight, applied time weight. Then calculate average expenditure on qualifying asset during the year. Then amount of capitalization, that is borrowing cost to be capitalized. Expenditure from specific borrowing, you can see loan amount into actual rate, loan amount, because that will be always equal to loan amount. Expenditure from general borrowing, expenditure multiplied by capitalization rate. Note, amount of borrowing cost capitalized cannot exceed the actual borrowing cost. Of course, the amount of borrowing cost capitalized should not exceed the actual borrowing cost. Borrowing cost charged to peer will be actual borrowing cost minus borrowing cost capitalized. चलेगा? Understood? Have you understood this much? I hope you have understood. Now, this point number 5 is important. Can be asked in MCQ format. MCQ format. What they have given? When the carrying amount or the cost of qualifying asset, when the carrying amount or the cost of qualifying asset exceed its recoverable amount on NRB, the carrying amount is written down or written off in accordance with the requirement of other as. I'll just give an example. Suppose the cost price of inventory is equal to suppose 1 lakh, and the borrowing cost to be capitalized मान लेते हैं is equal to 20,000, and NRB is equal to 1,10,000. Correct? It means just try to understand. Now it become 1,20,000. So can you capitalize 20,000? Because NRB is 1,10,000 and the carrying amount is this or this, whichever is lower. So in this case, out of 20,000, you will only capitalize 10,000 and the balance 10,000 will be transferred to profit and loss account. Or you can say do capitalization. This is cost price, this is NRB. So lower will be taken. Lower will be 1,10,000 and the 10,000 will be written down immediately. 10,000 will be written down immediately. Understood? Have you understood? This type of question can be asked. This type of question can be asked in exam. Chalega? Yes, sir. This also done. Now, the last point of this chapter is about, the last not, there is some more point. Commencement, suspension and cessation of capitalization. Means when to commence, when to suspend and when to cease capitalization. When to cease capitalization. Correct now. So when to commence, what AS 16 says that if all the following conditions are satisfied, then will commence capitalization. So what are the condition? Borrowing cost is being incurred, borrowing cost is being incurred. Second, expenditure on qualifying asset is also being incurred, and activities that are necessary to prepare the asset for its intended use or sale are in progress. Means when these all conditions are cumulatively satisfied at a particular point of time, from that date will commence capitalization. Means simple word, these first two conditions are more important, because third condition will be always satisfied in the normal situation. Means suppose you have taken loan at this point of time, so borrowing cost is incurred, but you started the construction of building at this point of time. Even though you have taken a specific loan, can you say both the conditions are satisfied at this point of time? So you will commence capitalization from this, and this borrowing cost will be charged to profit and loss account, even though it is specific borrowing. Means your capitalization period will start from this. Your capitalization period will start from the commencement date, when the borrowing cost is incurred and expenditure on qualifying asset is also being incurred. Understood? Have you understood? Yes, sir. Means before commencement of capitalization, all the borrowing costs incurred will be charged to profit or loss account as an expense immediately. When to suspend? Sometime what happen, active development is interrupted due to some unnecessary activities. Unnecessary activities means I can say which was not known to you. Unnecessary activities means which was not known to you. Means active development interrupted due to COVID-19 lockdown. That was not normal. Now. That was what? Abnormal situation. Active development is interrupted due to heavy rainfall. Which was not, for which we were having no idea. Heavy rainfall came, and in the area where we are doing construction, normally this type of rain is not occurred. So can I say then active development interrupted? But suppose active development interrupted in Meghalaya, and Meghalaya, can I say in Meghalaya, Meghalaya heavy rainfall is normal situation. So in that case, that is known, so will not suspend any capitalization. So you need to understand whether the entity was aware of that fact. If they were aware of that fact, then will not do any suspension. But if they were not aware of the fact, then will do suspension. Simple, but I will say in this way. So if the active development is interrupted due to some unnecessary activities, for example, we are doing some construction of building and some legal case was filed against us, and the High Court has given a decision right now stop the production or construction activity. In that case, can I say active development is interrupted due to some unnecessary activities which we were not aware, and therefore during that period when there is no development, will suspend capitalization temporary. But sometimes capitalization of borrowing cost is not suspended when the temporary delay is a necessary part of the process for getting the asset ready for its intended use or sale. Means if the whatever temporary delay has happened, that is necessary part of getting the asset ready for its intended use or sale, then will not do any suspension. For example, whenever we do construction of building, we give water for curing purpose, that is actually necessary for the construction activity, and therefore no suspension will arise. Or I will give one better example. Suppose you are doing construction of a bridge or flyover over a river. During heavy rainfall, what happen? There will be the water level will increase, and when the water level will increase, then the construction is not possible. Can you see that is not unnecessary activities? So in that case, when we are delaying the construction, when we are postponing the construction, that is a necessary part of construction activity, and therefore no suspension will arise. Understood? When to cease? Simply when to cease? When substantially all the activities necessary to prepare the qualifying asset for its intended use or sale is completed. So in simple word, once the asset is ready for use or ready for sale, then we'll cease capitalization. Means after that no capitalization will be done, even though borrowing costs are incurred after that we have understood from AS10. Once the asset is ready for its intended use, we'll cease capitalization, then there is no further capitalization. Correct? Now then whatever borrowing costs incurred after that will be charged to profit and loss account as an expense. Sometime what happen, the construction of qualifying asset is completed in part. Now one doubt will come ki suppose we are doing construction in part and we have taken one borrowing for the entire project. So once the part is completed, so can we cease the capitalization for that particular part and continue capitalization in the other part? Suppose this is one building, this is another building. This building is completed. So can we cease capitalization on this part? So just try to understand what AS 16 is saying, that if you can use this building, means part of building, you can sell this part of building, means you can seize capitalization. But if you can't use it, can't sell it, it means you can't seize capitalization also. Understood? So when the construction of a qualifying asset is completed in part and a completed part is capable of being used while construction continues for the other part, capitalization borrowing cost in relation to that part should cease when substantially all the activity necessary to prepare that part is completed. This is also important from examination point of view. Understood? Understood this particular point? We'll come to the question once I complete the content. Yes, sir. Have you understood? Last point. Exchange difference. This is very important from exam point of view. A question may be asked. Exchange difference arising from foreign currency borrowing, which is allowed as an adjustment to interest cost. So I will explain this from one question only. So come to that question what I have taken. Come to this question. Question 5. XYZ has taken a loan of US dollar 10,000 on 1st April 2003 for a specific project at an interest rate of 5% per annum. On 1st April 2003, the exchange rate between the currency was 45 per US dollar. Now it become 80. This is question of 2003. The exchange rate on 31st March 2004 was 48 per US dollar. The corresponding amount could have been borrowed by XYZ in the local currency at an interest rate of 11%. Calculate the borrowing cost and the exchange loss. What will be your answer if the interest rate on local currency borrowing be assumed to be 13%? Means what they want to say? Ki there is one foreign currency borrowing. So I am just comparing. One is foreign currency borrowing and one is Indian currency borrowing, INR. So when you have taken loan in foreign currency borrowing, so that is how much dollar? It is $10,000 at 5%. So what is the interest? $10,000 into 5%. So it is coming $500 multiplied by exchange rate on 31st March. On 31st March 2004, it is 48 per US dollar. So into 48. Into 48. So how much it is coming? 500 into 48 means coming 24,000. 24,000. Understood what I am saying? $24,000. So there is no doubt about this. This interest cost will be borrowing cost as per AS 16. Now what AS 16 is saying, that if you have taken the same borrowing in Indian currency, what would be the interest cost? If you have taken same borrowing in Indian currency, so guys, that will be $10,000, and when you have taken the loan, that time the exchange rate was 45 and the rate of interest, what they have said, the corresponding rate of interest was how much? 11%. 11%, 45 per US dollar. Chalega. So it is 11%. So it is coming how much? 10,000 into 45 into 11%. That is coming 49,500. Correct. Now what they are saying, in case of foreign currency borrowing with interest cost, you need to also incur exchange loss. So there is one exchange loss also. Exchange loss is $10,000 into 45 now become 48. So into 3. So that is a loss of 30,000. Loss of 30,000. Now this particular para is for this exchange loss, means exchange difference arising from foreign currency borrowing. So what they want to say, ki this may be covered in AS 16 and may be covered in under AS 11. If it is covered under AS 11, then it will be always transferred to PL. It will not be capitalized. But if it is covered under AS 16, can I say it may be capitalized if the borrowing is for in connection with the construction, acquisition or production of a qualifying asset? So if it is covered in AS 16, means out of 30,000, how much will be covered under AS 16, that we are identifying. So as per AS 16, the amount to be covered under AS 16 will be lower of. Point number A, actual exchange loss, that is 30,000. Point number B, difference between these two currency, these two interests, correct? Now difference between interest in Indian currency borrowing and foreign currency borrowing, the difference between interest I am writing, that is equal to 49,500 minus 24,000, correct? So it is coming 49,500 minus 24,000, that is coming what, 25,500. So what is the lower? Lower is this, means out of 30,000, this much will be covered under AS 16 and balance 30,000 minus what, 25,500, this will be covered under AS 11. AS 11 means how much will be covered under AS 16, that will be 25,500, and that may be capitalized, means just try to understand ki what they want to say, ki borrowing cost should be maximum 49,500. You can see 24,000 plus 25,500 is equal to 49,500, means if the sum total of these two, if the sum total, what is the sum total of these two, 24 plus 30 is coming 54,000. So out of this 54,000, to the extent of this will be covered under AS 16 and balance will be covered under AS 11. This is the point of discussion. So in exam always say in this way ki the amount of exchange loss will be covered in AS 16 will be lower of these two. Lower of these two means actual exchange loss. Point number B, difference between interest. So it will come 25,500. So balance 30,000 minus 25,500 will be covered under AS 11. Now suppose the interest cost, they have given one more point. Ki suppose the interest cost is what? Interest rate is 13%. Don't write in exam in this way. Huh? In exam write down in the way in the solution is given. Into 45 into 13%. Now it is coming 58,500. So if this is 58,500, lower will be what? Lower will be A. A is 30,000. B will be what? B will be 58,500 minus 24,000. So 58,500 minus 24,000, it is coming what? 34,500. In that case, the entire exchange loss will be covered under AS 16 and nothing will be covered under AS 11. Understood? Means just try to understand, if it is covered under AS 11, then it will be always transferred to profit and loss account. But if it is covered under AS 16, can you see it can be capitalized if it meet all the condition of AS 16. This is the entire discussion. I hope you have understood. Now if you read this solution, you will be able to understand how to write. So in exam, write down in this way. Interest for the period 24,000. Increase in the liability toward the principal amount is 30,000. This is nothing but exchange loss. Interest that would have resulted if the loan would have taken in Indian currency. Difference between the interest on local currency borrowing and foreign currency borrowing. Therefore, out of 30,000 increase in liability toward the principal amount, only 25,500 will be considered as borrowing cost. Thus, the total borrowing cost will be 49,500, being the aggregate of what this, and the balance 4,500 will be covered under AS 11. Then if the above example the rate of interest is 13%, they have given the answer for that. Understood? Chalega? Means what they have given, if exchange loss, if there is an exchange loss, then lower of the following is treated as a part of borrowing cost. Actual exchange loss, difference between interest on local currency borrowing and interest on foreign currency borrowing. Correct? The excess exchange difference, if any, will be covered under AS 11 and charged to profit and loss account. But if there is an exchange gain, then it cannot be regarded as an adjustment in interest cost. The exchange gain will be always covered under AS 11 and it will be always credited to PL. So this point is only applicable when there is an exchange loss. If this point is not applicable when there is an exchange gain cannot be regarded as an adjustment to the interest cost. Understood? Disclosure requirement you can do. So this chapter is also completed from my point of view. Now let us take the balance question. Have you understood this point? So already I have done some question. Now do some more questions. This type of questions are very much popular. Simple but very much popular in CA Inter. What they have given? On 24/2003, JLC Limited obtained a loan from bank for 50 lakh to be utilized as under. Construction of asset 20 lakh. I said if the question is silent, always construction, we'll assume it is a qualifying asset. Purchase, we'll assume it is not a qualifying asset for this chapter if you remember. Working capital will be not a qualifying asset. Advance for purchase of truck, it is also not a qualifying asset. So the loan was taken on 24/2003. In March 2004, the construction of shed was completed and masonry installed. So you can see they are taking less than 12 months because 24/2003 and March 2004, there is less than 12 months. Delivery of truck was not received. Total interest charged by the bank is 9 lakhs. So the treatment of interest under AS 16. So what they are saying? Correct. Borrowing costs that are directly attributable to acquisition, construction, or production of qualifying assets should be capitalized. A qualifying asset is an asset that necessarily takes substantial period of time, usually 12 months or more, to get ready for its intended use. Correct. So you can see they have assumed construction of shed is a qualifying asset. Purchase of machinery not a qualifying asset. Working capital not a qualifying asset. Advance for purchase not a qualifying asset. On the basis that machinery is ready for its intended use at the time of its acquisition or purchase. So it is not a qualifying asset, means we have assumed that at the time of purchase it was ready for use. Now what is the total? Total is 9 lakh. So this 9 lakh is on this borrowing, so this will be apportioned in this ratio. So this 9 lakh has been allocated to the construction of said purchase of machinery in this ratio. So 9 lakh into 20 divided by 50, 9 lakh into 15, this you can do. So this will be the total interest which will be capitalized. This will be the total interest which will be charged to profit and loss account. This type of question, a lollipop question, but write properly in exam. One more question I have taken because this type of questions are very much popular. One second. The company has obtained an institutional term loan of 580 lakh for modernization and renovation of plant and machinery. Plant and machinery acquired under the modernization scheme and installation completed on 31st March 2006 amounted to rupees 406 lakh. 58 lakh has been advanced to supplier for additional asset and the balance loan 116 lakh has been utilized as working capital purpose. The accountant is on dilemma how to account for the total interest during the period on entire institution. Once again, modernization and renovation plan assumed to be a qualifying asset. Nothing has been given because the loan was obtained, the date is not given, and completed on 31st March 2006 means you don't have the actual understanding about this. So modernization and renovation, this is nothing but construction activity qualifying asset. Advance to supply of additional asset. Now advance plant and machinery acquired under modernization scheme and installation completed. So you may assume that installation has taken more than substantial period of time. Correct. Now you can assume, and they have said qualifying asset, or you can also assume it is not a qualifying asset. I will read the entire answer. They have also say that it can be also assumed not a qualifying asset. Working capital is not a qualifying asset. So this 2052.20 has been allocated in the ratio of their expenditure. That you can do. This you can do work out. But let's see what they have given. It is assumed that in the above solution, modernization and renovation of plant and machinery will take substantial period of time. Regarding purchase of additional asset, the nature of additional asset has been considered as qualifying asset. Alternatively, the plant and machinery and additional asset may be assumed to be non-qualifying asset on the basis that renovation installation of additional asset will not take substantial period of time. In that case, the entire amount of interest will be recognized as an expense. Means they have given an alternative solution also. Means because the question is not clear, you may also assume it is not a qualifying asset. Or you can also assume it is a qualifying asset. Understood? Correct? Yes, sir. Chalega. This question number 8 is thoda sa interesting question and of course super expected also. Super expected is my last question for today. Harish Construction Company is constructing a used building project consisting of 4 phases. It is expected that the full building will be constructed over several years, but phase 1 and phase 2 of the building will be started as soon as they are completed. Following the detail of work done on different phase of building during the current year, you can see phase 1 cash expenditure, building purchase. So this is total expenditure. This is a total expenditure. Total expenditure of all phases 221, and the loan taken at a rate of 15% at the beginning of the year is 200. Okay. During the mid of current year, phase 1 and phase 2 have been completed, have been operational, and can you say because it is operational, so we'll cease capitalization for phase 1 and phase 2 and will continue capitalization for phase 3 and phase 4. Find out the total amount of to be capitalized and to be expensed during the year. You can see the total interest expense is 200 lakhs. This all figures are given in actually 200, just write down rupees in lakhs. This all figures are in lakhs. So 200 lakhs into 15%, that is coming 30 lakhs. Total cost of phase for phase 1 and phase 2, this is 34 lakh plus 64 lakhs. So this is 34 lakhs and 64 lakhs, means that will come 98 lakh, and this is this plus this phase 3 and phase 4, 55 plus 68, this will come this lakh, correct? So total cost of all phase will be 221 lakh. Now total loan is 200 lakh. So can I say now this 30 lakh will be allocated to phase 1 and phase 2 and phase 3 and phase 4 in this ratio, that only done. So you can see 30 lakh has been allocated in 98 lakh and 123 lakh ratio, and this will come the approximate interest cost. But can this is for entire 12 months. Now that has been given that phase 1 phase 2 has become operational during the mid of the year, means out of this 6 month interest will be capitalized and 6 months will be charged to PL, and this entire 12-month interest will be capitalized. This is the solution. You can read the solution, that is only given. Ki half of the interest cost related to phase 1 phase 2 should be capitalized and half will be charged to PL. In this the full amount will be charged to PL because till now the asset is not ready for its intended use. This is the entire discussion about a 4 accounting standard. So we have completed 4 accounting standard we have done. I hope you have understood. Just comment me in the comment box ki whether you have liked, whether you have understood the entire AS or not. This will motivate me to complete the entire syllabus. Correct now? Understood? So we have done today AS 26, AS 16, AS 10 and AS 12. Now what is your job? Ki now once you have done this from me, just do all the question of your book, whatever book you are following. Then come again tomorrow. Tomorrow we'll do cash flow statement, very important chapter, AS1 and AS2. These 3 accounting standard will do. For today this much only. Thank you very much. We'll meet tomorrow. Don't forget to subscribe the channel. Don't forget to like this video. Correct now? And don't forget to comment in the comment box ki how you have found this revision video, whether it is helpful or not. Just comment it. Thank you very much. Meet you soon tomorrow. Bye bye.